that just come off the that shit's really hot. Oh, you did? When you first brought it over, I almost I thought I was gonna like sheets of skin from my mouth. Oh boy, the updates were big this weekend, huh? Let's see what we got going on here. It's I've got updates across everywhere, like um, Thinkorswim, Streamlabs, Google. I thought that the updates came out on Tuesdays though, not Mondays. Dude, my phone doesn't work either. Like my phone is crashing this morning. Can you tell me if you get this phone call? Check this out. My phone just turns off. It doesn't even. It says I'm connected to the. I don't know if it's ATT. I went and looked, and ATT was down this morning in Detroit. I wanna go home. What's the 10-year doing this morning? The fucking 30-year too doesn't look good. Dun, 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 10-year tits and ass TNX. See that TNX? Like, look at TNX too. It just goes straight to a voicemail, or like my phone is off, right? Yield curve is inverted again. Uh oh. Move that up. Or to take that one out and then I already restarted it. I went through all the motions this morning with it. I wanna go home. It's the first song I ever learned on guitar. You can kind of push that up there, and then there's your HT right there. And there's still a gap down below here. This is where I am down here. If you're out there while watching the show right now, just so you can see down below here. I'm waiting down here unless I start seeing like new highs. There's kind of a trap in here for buyers on Monday. We still haven't swept the Friday, Thursday lows, and we didn't have the pop up on Sunday. So with no pop up, I am looking lower. Just be patient today. Let the market do its thing on Monday morning like this. You don't want to be buying this dip down here. But you know what I mean? You don't want to be like buying this dip and then the real dip's down here. So let's follow your rules. Nothing's ever changed with this stuff, right? Watch this nice little back test right here in the hourly trigger, half hour trigger. If this back test is good, then we can start talking about buying dips over here. But we're not there yet, so we get sucked into a vortex in here, it'll blow. There's like two traps there. There's like a trap below, and then there's another trap up higher. Just keep watching this here.
Tesla shares are hitting over an 8-month high, last up 2.5%. Apple shares as well over an 8-month high after Wedbush set street high price target of $310. They're up 2.1%. Shortly expecting comments from both ECB's Lane and Fed's Williams. They are speaking at the same event, and we've got the registration link if you'd like to watch them live. That's on the feed. Crypto stocks full, tracking Bitcoin's decline here, as Coinbase is down 3.6%, Bitfarms down 7%, Strategy down 2.3%. So we are still waiting on comments from ECB's Nagel and Fitzwilliams, but we're now 10 minutes away from the top of the hour, where we get the Eurozone consumer confidence flash. Forecast minus 15 on the prior minus 15 spot 5. Also at the top of the hour, we're expecting comments from Fed's Musalem, who will share his outlook for the US economy and monetary policy. Following his remarks, he's going to be interviewed and he's going to be taking questions from an audience as well. There's no indication whether a text is going to be expected, but there will be a Q&A.
See if we can hit this gap right here. Come back down into 12 and then start moving. You can see it here. Take some off as we approach right around here. SPX. Let's put the gamma chart up. What do we got here? Dude, 6,700 still a fucking... target. This is the target.
In 5 minutes time now, at the top of the hour, we're expecting comments from Fed's Musalem. We have posted a live video for this on the feed for those interested.
67.50. Woohoo! Make that one yellow. And then red. 68. Target is I don't know if it's 6,800, but let's try for 67 to start. SPX gamma. And 66.50. Fires. Gamma support. $6,505. Jesus. There's a giant fucking gap down here. 6,505. Watch out for a pullback here on the 10 a.m. hour. Dude, the gamma flip is like 6,505, way down there. Market is extremely supportive right now. 6,555, 6,600. 6,600 is real support. Gamma wall. Okay, so we got large gamma wall right there. This is a 4-hour chart right here, too. I mean, look at this. Gamma flip is way down here.
One minute to go for the Eurozone consumer confidence flash, and we're shortly expecting comments from Fed's Musalem. Again, the live video is on the feed. No indication if a text is expected.
That.
Ten seconds. Seeing comments come through from Fed's Musalem. Says the economy is near full employment and recent cut should help maintain that. Says I supported the quarter point cut as a precautionary move to help the labour market, but I see limited room for further easing. Monetary policy must continue to lean against inflation that remains above target. Overemphasis on the labour market could lead to policy that's too loose and do more harm than good. Says tariffs are adding to inflation and the impact on prices has not yet been fully felt. It says loose financial conditions and other factors mean the Fed should move cautiously on further cuts. It says I would support further cuts if more signs of labour market weakness emerged, provided that risks of persistent inflation and rising inflation expectations have not increased. So Fed's Musalem as well says more cuts are conditioned on further job weakness. Eurozone consumer confidence of minus 14.9, minus 14.9. Cheers, higher than forecast, minus 15.
Little bit of gap down there. Pivots. There's a little bit of could roll here, but could also pop up here and then roll. Pay attention to this here.
We have posted our Fed's Musalem's full speech on the feed for those interested. We have posted the Eurozone Consumer Confidence September flash reports on the feed for those interested.
Senior White House officials on TikTok deal say hundreds of billions of dollars of economic activity over the next 5 years.
Good morning, brother.
US official says that Trump will sign TikTok order later this week. It's just White House officials briefing reporters on TikTok deal. And US official says Trump will extend TikTok pause an additional 20 days. And senior White House official says executive order will declare TikTok sale deal meets 2024 law requirements. And US official says TikTok algorithm will be operated by a US entity. So a copy of algorithm will be brought to US group. Again, US official says copy of algorithm will be brought to US group and the TikTok algorithm will be operated by US entity. Senior White House official on TikTok deal says we will allow Oracle to study algorithm. US official adds that TikTok deal will be closing 120 days from signing. US official adds that TikTok consortium will be US and global investors. US official says there are no plans for additional China discussions on TikTok. We're confident China has approved TikTok deal. US official on TikTok fee says no details have been finalized. Fed's Musalem says he's open to further rate cuts. So now this is the Q&A section with Fed's Musalem. US official says there is no golden share TikTok deal. Just a heads up, Bank of England's Pill currently speaking. Remember that's in the, if you did sign up for that registration for the link to watch him, you can watch him there live. U.S. official says U.S. government will not have equity in TikTok deal. So again, U.S. official says U.S. government will not have equity in TikTok deal. Fed's Musalem says the Fed should tread carefully with additional easing.
A senior White House official on the TikTok deal says we may need a US antitrust review. A senior White House official on the China and the TikTok deal says we may also need an export license. A US official says no TikTok valuation is set yet. Senior White House official on the China TikTok deal says we expect to see a closing document at the end of the 120-day process. Feds Musalem says, I favour more communication on the intent of asset purchases. It's important to only use QE to support the dual mandate and not be perceived as helping government debt management. Feds Musalem says bankers saying that conditions are good right now. Fed's Musalem says it's important that in the implementation of the Genius Act, the limit on stablecoin paying interest should be respected. And Musalem says it's important that stablecoins remain a payment instrument and not a savings instrument.
We should roll right before we hit this all-time high, so watch out. I think like I want. All right, perfect. Oh, Jesus. Check one, check one. Dude, my monitor here is pretty loud. Check one, check one. Check one. Give me that voice. All right. Let's get rolling here, guys. Hold on here. Oh, hold on here. Break time. Be right back, old Manny. Be right back. Good morning. Happy Monday. Hope you're all doing well today. You had a good weekend. I left a post on, or a few things. Let's do some housekeeping. So I did request for a paper trader. I saw someone ask about it this morning inside the Discord. I did ask about the paper trader. Our developer lost internet this weekend, so it's still off. He is in his office this morning, and this developer is Joe Donut.
The US to an average productivity regime. The promise of AI not yet visible in the macro data.
Tell you guys. So we did not get to do a paper trader over this weekend, but supposedly we will have it this morning. So if we do get it this morning, you will see me working on it here in the background. So we'll roll it out together. So that's an update on paper trader. Heading into this week, I'm looking at the market as suspect, and I want to talk to you about that right now if I can this morning. Now, it's not bearishness per se. I think we go way higher quickly, but I'm looking at the market from a seller's perspective and what they're what they want to do. Now, I don't know if they are going to be successful. Let me turn this down a little bit. If they're going to be successful on this quarter end or in October. It could take into October to get an unclench, like a whole full month. What I do know is that the higher that we go, the more it all comes back usually, and it can get violent. So when I say I'm looking at the market, sus. I think I posted this on Twitter this morning. I'm looking at the market sus today. It's not that we're not going up. It's that do we fail at any point and get rolled down into like the 50s, like 650. So we'll look at it together this morning. We'll take a look at it and see what I have for expectations to move higher. I think we trade like 675, but I think there's a failure in there somewhere too, and I don't know when and where it happens. We got to watch it closely. Even this morning, I was like, I'll just wait and make sure there's not a big red bar on Monday morning. I don't think it would happen today. I think it would happen later in the week. But we'll take a look at it this morning and like Tuesday, later in the week. Yeah, like Tuesday close. We can go straight vertical right now and start rolling into the end of the month and the first week of October. Let's take a quick look at this on a different frame. Hold on one second here. Give me one quick second. And this is my only concern that I have for this week. I'm pretty bulled up here, but hold on here. Just one more second here. Can I do this from a 4-hour basis? There we go. I'm just going to delete all this. It looks kind of messy on my end because I got all the marks on there like DivX and then in a month and all that kind of stuff. Be careful of the all-time high. We'll sell this if we break it. Just as we come into this, if we break all-time highs, oftentimes we'll do a big sell to the downside. So as we get to come in here, it could get kind of spicy. Just watch that closely there. There's a good look too this morning on the equal high right here. So we should have a nice little pullback and then start cranking into Tuesday. Give me one quick second here. Stop. Delete everything here. Okay, that's nice and easy. I think this is the easiest way to describe this. I'm trying to make this simplify this. 30th. 29th, 30th. So we're going to look at this from a perspective of just simple, keeping things kind of simple here. So this is just basic trading, right? I'll just take a peek at this together. This is a trend, right? Major trend whenever we have a break of major trend down all the way down over here and then back up again. So you've got these nice lows to buy dips on, like here. Over here is another trend, and then we've got this big, beautiful one right there. You can see that one. Then you can have this like mini trend in here, and fascinatingly, there is a higher trend up here.
Tariffs are only one of them.
Move that over there to the third. What I really want you to think about is this. I want you to think about October. The start of October, and then I want you to think about quarters, right? So we have a third quarter ending, right? And or ends on the invariably in the third.
Tariffs on inflation.
You just turn this off. You don't need to hear any of this crap. It really doesn't matter. Hold on a second here. I'll put this up. And this is the third. I want to say. Let me just check the dates here. So the third is that Friday. So this is a Friday in here, the third. It's not so much that I don't like the idea of coming up here. I do. I like the idea of coming up here. But even though I like the idea of coming up here, I think there's some kind of possible trap in here, like 675-ish. It could even be something fast, like we're racing up here, let's say into... There's 675, 674, like right there. And there's some kind of like fade in here. Let me just show you that there. So it's not like I'm not bullish. I'm bullish. Like I'm bullish fast. Like run this thing up and then this like slow fade. There's also on the 30th itself. I probably could have drawn this somewhat better. Like up here, just close, right? And then maybe one more on the 30th. One more up here. And then down. Probably a better way to show it. Maybe. And I'll show you on another chart here I'll show you a better representation of this. On another chart, but basically on a 4-hour basis, I'm looking for this big up move here, right? Some kind of a tee off down in here. You get your second failure to get a new high. We unclench into this like quarterly OPEX month end. I don't know that they can actually get us out of here either. It could be just a lot of like sideways shit into the 15th of October. I think Larry Williams also has us at the most supportive time of the year from October 15th into end of year. Believe it or not, November, December. He's got some stuff. He's got a lot of rotation going on in individual tickers. Not so much in indexes, which of course is against what the banks are saying right now. They're saying that you should see more volatility in indexes and individual tickers will go up in the end of the year. But even so, bullish in here. But my one caveat in here is, are you looking at this from the buyer's perspective or the seller's perspective? And I'm looking at it from a seller's perspective. I'm looking at it from, if we go up here, are they going to tee off on us? That's 675, 674, somewhere in there. The first one should be 672.5, and then like 674.80. They're going to take swipes at the market in here and at 672 and a half. And if they do that early enough, we won't be able to roll higher too. So just keep a note of this as we move forward. I'm pretty bulled up here, so I'm bulled up like today into tomorrow. And some kind of a squeeze higher. I think I titled this show "Squeeze It" or "Squeeze Me" or something. But it's from the eye of sell side, and I think there is a trap up here to sell us down into this time period. Now, the more information that you need here the thing that really does matter here isn't even this or this or this or this. So if I'm looking at this from the idea of being sell side, I'm not necessarily like, hey, I'm going to buy a bunch of puts and try to sell this whole thing down. I really don't care about price. The only thing that I care about is that we don't break trend. So not price. I'm price agnostic. I just don't want to see trend be broken into that first week of October. So we can buy another big dip to go up again from lower. And I want you to, from a perspective viewpoint, just look at this. I love buying dips down here. I love it. Love buying dips down here. And when we start getting a little long in the tooth up here, I get a little like, maybe. I start to question as well, like who's the trader on this stuff? The guy that works at Wendy's, or is a guy that is looking for a dip to buy? And like dips to buy are where I always feel most confident. You know, up in somewhere down in here or somewhere down in here. It's where I always feel more confident, like just down there. Bloodbath, everybody's hair is on fire, that kind of stuff. So sometimes the trade is not for me. Sometimes the trade is, maybe they cut us short. There's something else in here too. You know, you start blasting up here and it becomes, you know, big red bar in. Now you're sucked into the vortex of quarterly OPEX and stuff. And like the tractor beam just starts getting you and you're like, oh, fuck, this sucks. So maybe I'm just looking at it more from the perspective of I'll be waiting over here for you. I don't mind trading 0 dates and stuff like that, but for like big trades, I want that nice little big turn. You can get them all the time. There's one right here, one right here, one right here. And there's always that fear of missing out trade. And I think that's where we are in that fear of missing out. Rather than is I'm trying to start a trade here for the week, and is my hair on fire or not? And I always like the hair on fire. When the hair's on fire, I feel way more confident. When like traders are running around and they're all, you know, oh my God, my whole account is long from right here, you know? And I'm just like, what do you mean what did you expect us to go here? You know, what were you expecting? Were you expecting like just straight vertical and it never ends? Like, so I think that's just my, I think this is just my, how I'm viewing this is the future and not today. So when you see me say things like, this looks kind of sus to me, I'm expecting sellers to be waiting here. And I'm expecting them to be stepping in to the upside. Coming into all-time highs right now on SPY, trading 664.68. If you got riding the NARS expectations over the weekend, it also, I think it shows this 672, 675. So let's go look at the main screen here. We're going to look at a 4-hour perspective. Hold on here. Delete all that. We're going to go trigger screen. And we're just going to look here on a 4-hour. Get rid of some of this. Kind of looks like a blow off top, right? Looks good. So here's the third right here. This is Friday the 3rd at 1600. This is the 30th right here. We've got the teaser, right? This is the sausage that I always talk to you about. The sausage is 680-ish, around there. Then you've got 675. Make this one yellow. $672.50. We've got Tuesday close right in there. And that's where I've got on a 4-hour basis. This is where I've got us going. So not a 1-hour basis, but a 4-hour basis right here. And this is where the gamma flip is down here. Let me just check this, make sure I got this right. Yeah, gamma flip is 6505. This is what I've got us going on a 4-hour. My only issue here is I don't really have. I mean, the only issue that I have here is just like that fake out, and this is important right here too. I want you to see this. This is the breakout from trend. And this is the entire basis of our new week right here. A bunch of new information. And there's one more lower from Friday. This is Wednesday. Where's Thursday? Yeah, I don't even think that matters. I guess you could think about this one here, but this is to me, this is kind of where we have to stay above this. I'd like to see us stay above this Thursday, 4 o'clock. Yeah, there's Wednesday. I don't know that this one matters. Maybe at least the door is open, but it doesn't mean we're going to go down there. You'd need to see the second low. Check that right there. There's the hourly trigger right there. There's some potential for 662, 672. There's 70. Hold on 1 second here. We're going to get some flows in there too. $670. That's right. Like it starts getting bouncy in here. 670, 672, 675. This is the 30th. I don't see that as being an issue either. $1,600. Let's do this one for Tuesday at 1,600. Thursday, Friday, Tuesday, Monday, Friday. This is Tuesday the 30th. This is Friday. We'll give it Tuesday the latest, but I think Friday could happen. Let me just check this really quick in an hour. Here's your hourly trigger right here. there. Slam that one. Hourly trigger pullback right there. There's your 675. There's probably a failure lower than that. Maybe a little bit lower. $670. Fuck you, no. There's 5 right there. 675. Hang tighter. Remember, too, when we trade, this is a 4-hour. We can do this whole thing, right? This whole range. Velocity. Nope, no. Come on. This hour right here. This all looks good. Like right in there. And I wonder if we can hit that sooner. Yeah, that one works too. That one works too. See this big one right here, the 26th, the 2nd, the 3rd. Like all this right here on the inverse. $31st. That's the 7th. Just monster squeezing up here. It's a capitulation trade for bears. It's like a sell side, or it's capitulation for sellers. Right there. You know, right up, just ram it. Give me one second here, guys. The only issue I have with this is you know, they're gonna try to they're gonna try to sell that shit. You know they're gonna try to sell that shit, and you know they're gonna try to sell that shit right there. They're gonna come in here and try to swat this, like start the roll early bullshit. The only thing that I would say was just keep trading the 4 hour and the 1 hour, and this is the basis for the trade right here. Buy dips, but if you come into a red candle, they come in here and they start selling this down, we start losing that hourly trigger. We have to probably be concerned, but that's all I see. It's the only like negative sus thing that I see is that we're going to capitulate these guys. We're going to take every fucking stop they have, I think. Let's go back and look at let me go back and show you guys my reference for this. And the rage that's going to come out of this. So here is this is a prime example. It's one of the most beautiful ones I've seen in a long, long time. So this is, if I had this on the inverse, right? Think of this on the inverse here. You are here. So here's the 26th. We're in the 22nd. But I want you to think about this right here. Now, I don't know if this takes like just a few days or into the month, but I want you to think about this in terms of like, do you see this capitulation move down here? It's fairly violent, right? Into a quarter end. It took another month to break out. Let me just show it to you another way to look at it. So this would be the top line that I just drew for you. And then the inability to break out of trend. It's right in there somewhere. And what's more important here is this right here. You have this like monster capitulation to the downside. And then they'll attempt on the new month, new quarter, to break out and away. You can see, though, it took another month from April. The breakout took a full month, like October. So let's look at this on an inverse. Can I flip this screen upside down? Just take a look here. Bottom right-hand side. Nope. Not that one. Trigger display. Transform. Flip vertical. So bear with me as we do this because I just flipped this upside down, but I want you to see this monster move up and then the second high, right? And then the drop down and the eventual roll to the downside. Now, I don't think that this implies that this is the end of the bull run or anything like that in any way, shape, or form. Let me flip this back over here. Trigger screen. Transform vertical. There we go. So just in this one right here, or trigger screen, if you have this on the inverse, and you're talking about like squeeze their balls off up here, right? They try to sell this down either the 30th or the 3rd or whatever, and you could still see like one more, I kid you not, like one more, higher high, higher low. And then we're like fucking around inside of this October bullshit. I'm not in the camp of we're crashing this. I know some traders are. I'm not in that camp. I'm looking for that big end of the year move, whether that's 650 or higher, even up here. I don't give it 650, 675, whatever it may be. Or 630 or 6,000. I really don't care the price. I just care that I can find that big trade for the end of year. Let's leave that right here. Let's go back to a 1 minute here. Got the 10 a.m. buy. Coming into 12 p.m. I think. No, not yet. Hold on. And to that point, even more so, you see this prior high right here and this one right here. No holds barred, right? Take this one out. Now taking this one out, new high. You know, that's pretty bullish, right? It's not bullish. It's extremely bullish. And they're going to try to buy this right back up again to go higher. So this looks good. I like it. If I get the nice back test here on the half an hour and hourly trigger, I'm going to take it. I'll take the long. I just want to see that nice squeeze, get away from this any kind of like red bar activity. And then if I can swing down here, grab this, I'll trade this up into 675-ish. Look at this. I want to see that peak above here too. 668.50. Be wary of the 6070. I think I posted something like this for you on Friday in the stream. This crank higher. We can't see it right now, but another thing too is that this could happen faster than the 30th. We could hit that 675 like in a day or two. It could be that violent and that fast. Let's go back over here. Let's check the hour again. Hold on. Slap another one right here. There's your target right here. We're already hitting it. Calls rolled higher to 6,800. Let me just put a quick second here, guys. I got a bagel made for me. It's cold now, though. Yeah, I'm reading. Mm. Yeah, I'm reading Scott's stuff right now. Scott led off this morning with hold on here. Scott Valwiz made an email this morning where he said quote, "This has been a market where you've been paid to be irresponsibly bullish, period," end quote, from Tony Pasquario of the Vampire Squid GS. With euphoria gripping prices across the markets and the everything. Hold on here.
Disconnected.
With euphoria gripping prices across the markets and the everything rally perma bubble, it certainly feels like plenty of evidence is incoming that we just witnessed a long capitulation moment last week. I don't think that's done. I think that the capitulation is this week. I literally think we're going to go vertical. I think we're going to take every fucking stop that they have. It's almost like vertical. I think the capitulation is this week. And it could last even into, I know I don't want to say this, but middle of October. I think it's going to go vertical. And it reminds me so much of March, April, and it was violent. Like when they said, like in March, April, when they said, this is your, I don't know. I think they said this is your, I think they said something like, what was it called? It was called Tax Day or something. I forget what it's called, but it was Liberation Day in like March, April. And there was just like one more fuck you. And there is something to remember about it, though, which is if you were buying that fuck you moment, there were, within the course of 2 weeks, you got out of it just fine. But you had, at the time period, it felt like a nightmare because you're buying, big red candles coming down on your face. And I was down there buying, and it didn't feel right. It felt horrible. So I think the same thing to some extent applies here. But I think the same thing inverse happens right now, where they're just going to squeeze every one of these assholes out, and they're going to drive them. And not only are they driving them, but I keep looking at like 6,000 and 630 and 650. And you can clearly see they're trying to close a fucking door down there, or all those doors they're trying to close. And I got a hedge on that expires November 17th. I got to look at it, but November 17th, 18th, I got a massive hedge. And it doesn't print unless we print under 632, I think. And we're closing that door. Like 6,000. It prints hard and heavy from 632 to like 6,000. But like 6,000 is closed. Or it's not closed, but like 6,000 is not like, or the percentage chance of us trading there is getting smaller and smaller by the day. And then 630 is doing the same thing, and even 650 is doing that same thing. Even trying to target a downside right now, I'm like, your best bet is 650. I mean, we can trade 630, we can trade 6,000, or 600 or whatever, but I wouldn't be betting the whole fucking basket on it. So this what it looks like to me is that I don't think the capitulation is quite done yet, but I would be looking at this from sell side's perspective. So think about in March, April, when you're seeing red candles come on your face and you're still looking at it from a buyer's perspective. Like, I should be down here trying to buy all this shit. You know what I mean? Like, everybody's hair's on fire, and you're like, I wasn't trying to sell that last that March, April. I wasn't trying to sell that. I was like, where can I buy a fucking dip? Let's do it. And I had already bought twice down there, and I just wanted to get in and get out. And then I remember I bought all that shit, and I got so angry. I got so fucking angry down there in like late March, early April. I was so angry that I was like, I'm getting off the bus. I was like, the moment we hit the 90s, I'm out of here. I'm like 92, 6,000, or at least with risk on market, like owning spoos, whole account shit. And it wasn't that I thought that I was bearish. It was that I didn't want to sit on the volatility train. I didn't want it. I'm like, I don't want to go through the next 4 years. At the time, he was painting the tape. Trump was. He was painting the tape like right when he got elected. And I had like 3 months of the painting the tape. Maybe not three. November, December, January, February, 4 months. Had him painting the tape every day. And I'm like, I don't want to do this. I did this during COVID. It was a fucking nightmare. And I wanted off the fucking train. So I'm like, 592-ish. Somewhere in there, I'll get off the bus. I'll trade spreads. I'll trade swing trades, that kind of stuff, or I'll buy individual tickers. And that's the other thing that's happened since then too is if he comes out publicly and says your stock sucks, you wake up to the nightmare, right? You wake up one morning and you're down 10, 11, 12% on your favorite stock that hasn't fucking moved in 6 months. And those aren't fun. I've been there. It's never fun when you're stuck in that trade. So I went a little bit more risk offish this whole year. Like, I'm going to do spreads. I'm going to do time on trades. And my one big fear was getting trapped in the market. Because I don't see this market going up next year. I'll be honest with you guys. Like, there's like an argument that we have 2 more years of bull town. The argument is also that we've reset the bull trade, the new bull run. And I'm viewing the markets more like the late 90s, where I wake up one morning, we're down 20, 30%, like literally over the course of 3 to 5 weeks. Even if we continue higher into the bubble, I think that's reasonable to think like that. So if that's the case, if we are going to extend this market, I think there's going to be some bloodbaths in there. And if that's the case, I'd just be patient. And when one comes, they're usually twice a year, right? Usually get like once or twice a year. You get a decent pullback. And so I think that the mantra moving forward into Q4 and Q1 of next year would most definitely be, hey, can we go down 20, 30%? Yeah, we just did it in the spring, you know? And when you see this volatility here is very reminiscent of spring, isn't it? This positive volatility. It's looking, acting, quacking like a duck. This looks like bubble trading to me, where we go violently up, violently down, violently up, violently down. So I think the mantra here heading into the end of the year should be some kind of long with a seatbelt, and expect decent pullbacks to buy dips. And I think it's okay to stay long. I just I have to question who am I trading with? Am I trading with a day trader? And that's a whole different thing, right? Than trading with someone that buys the market. We talked about this, I think, on Thursday and Friday. We had a long discussion about traders being blowing up accounts. And now that's not our community, but you know, when you get 20, 30 people in your community that are blowing themselves up, you ask the question, like, so where are you long from? And how are you getting long to make money in the market? And how you do that is not day trading. It's not trading futures, not in my view. In my view, you're looking for pullbacks to the daily trigger, to the weekly trigger. I think that mantra matters so that you can be long where we are right now. You can be long from a great position of no fear or manageable fear. So I think that applies here too. Probably a good thing that we don't have the paper trader yet, because I wouldn't buy this. And let me ask you that. If I gave you $1 million, would you buy this? Right here where we are right now. And the answer should be no. Would you buy if I gave you $1 million today? Would you buy it with the $1 million? My answer to you would be fuck no. I think it would work right now, but I don't think that that risk tolerance. I don't think that risk tolerance is to do that. You know, I guess maybe I sound like an old bitch, don't I? Hold on a second, I gotta eat this thing. My wife made me a nice bagel for breakfast this morning. You'd pocket the rest of the milli. I think day trading it's fine. I just wouldn't. I could sit. Sorry, I'm like eating on stream. I could sit on money for a year if I needed to. Even just the daily trigger, we pull back there all the time. Matter of fact, we haven't pulled back to the weekly, and I think the longest period I've seen in some time. Like it's been years since I've seen us not pull back to the weekly trigger. And I'm like, man, we're just begging for it. Like we're just begging for that fucking pullback. And I always like that pullback. I always love it. I always like closing that door, and then we're turning around, going higher, and there's like some confidence in that pullback. So, I was thinking about it this weekend. I'm like, we might not even get a trade for that paper trader until middle of October, even middle of November is possible. And I don't care what price is. I think that's the Larry Williams mantra too. Is the Larry Williams mantra is I don't give a fuck what price is. I care about like when is the market most supportive, and I think living by that is kind of the way to go. And normally for me, that's a pullback. I always feel confident in a pullback. I've had to beat that self into me because I can't tell how many fucking times where I chased price and then a few days later the shit was on fire and I was on fire and my whole shit's burning to the ground and the only thing holding me up is like a 1 minute trigger. I'm like, "Ooh, this is amazing," and then the one big red candle comes in. And all my money is gone. So I think we go up here. I think we grind higher and take all their stops. But I am looking for that pullback whenever we get roped into it. And I think my stance changes here before we get there. And I think I want to speak to that too, which is whenever I say to you, sometimes you'll see me on like public say things like always before and never after. Like I'll tell you what I'm thinking before any move happens, what I'm thinking. And I think I say that because I think it's easier to come back after the roll and be like, oh yeah, I was always waiting for this or always waiting for that or whatever. Or and it doesn't help you as a trader, does it? It doesn't help me as a trader to have people go out there and tell you after, oh look, it rolled down. Look, I'm right. I think it's important for a trader to tell you what they're thinking. Like, hey, I see us going up higher here, cranking higher, but I'm looking at it from a seller's perspective. As we take all their fucking stops, they're going to come in. I can guarantee you that when we go up here and hit this, I'll guarantee you that when we come up here and hit these numbers up here, this is where they are. I know it's a lot higher, but like they're up there waiting. Rightfully so. So Scott put out an email this morning. He said, coincidentally, not, implied volatility hasn't been this low at this time of year since 2017. And I haven't read this yet, but I'm betting that he's on the same thing, which is because I think 2017 is probably talking about Volmageddon or something. Or some kind of a vol type event, which could happen. We grind up to like 75, and then we get a vol event, and you get like 1, 2, or 3 months of heavy hard selling. We can't predict that. He can't. I can't. Nobody else can. But we will look for that roll if it presents itself. That vol event might just mean we're trading 650. That vol event could be a trade in 630, 6,000. But I also want you to think about like if that vol event happened with, like right into like Christmas Day or something. Everyone's crying and whining. We're going to the moon, bro. And instead it's we're gonna wreck you the entire for the next. We're gonna beat you like a bad donkey for the next 2 months. So just be aware of it. I don't think it can be traded. I think it's fine to put on a hedge if you're not hedged. I think putting a hedge on it like 570, 674, 672, 674, somewhere in there. Put a hedge on there. I think is valid. Or even one right now. I don't think it's going to matter. But just be aware that it's looming in the background. And normally it's something that's mechanical. It's not something like an event-driven thing where you get bad news. You'll just wake up on a Monday and it'll be a big red fucking candle down in your face, and it'll get saucy. I think Jede Marcus even spoke to this. He said last week on Friday, I think, we just need an old school Chicago 2-lot sell on MES, and I was like, I'm with you on this. Like, see it. It's right. It's like right fucking there where everybody's partying. We're like, woo, yeah, chase it, And I'm like, what are we chasing it with? 0 dates, 1 dates, weeklies? That's fine. Are we chasing it with owning everything? Because that's not fine. Because you get stuck in there and you're just like you're fucked. So just be aware of it. If you're scared of trading this, you don't have to. If you're not scared, just make sure that you can lose all your money. Okay, just remember that like last week when I was asking people, I took a poll. I was like, is anybody red? Like, you shouldn't be red here. I was making money, so I'm like, yeah, everybody should be making money here. And we had some people that said they were red. So, if you could blow up your entire account if we rolled right here, right now, we got a problem. And that means that you don't trade back tests, and that you're instead focused on chasing degenerates. And being that degenerate is just not the way. It really isn't. Like, there's always a new high to be made. There's always a dip to buy. They're literally like the stock market's trading $665 for a reason. The S&P 500 has been in business for a very long time. You know what I mean? It's not trading $20,000, is it? No. Because of why? We get pullbacks. And when I get a pullback, I'm always more confident. And then you get to reap the rewards of your discipline on highs like this to take the money and run. So I haven't read his note yet, but I'm assuming that he's talking about this. And he said, coincidentally or not, implied vol has not been this low since 2017. Before Volmageddon, of course. The cacophony of "Don't Fight the Fed" is one awfully loud mob. A CNBC "Don't Fight the Fed" drinking game would put you under the table by 11 a.m. So I'm supposing it's time. Now, I'm not going to read to you the rest of his note in here, but I'm not the only person thinking this. You should read his notes, the notes that he puts out. This is a smart guy. And I'm assuming I'm not the only person thinking the same thing. Now, I think it's more like March, April, where we're going to take all their fucking stops. But I am concerned about who is on the other side of this trade. And are these sellers up there just waiting to fucking beat the fuck out of us to the downside? So, and I don't like I don't like trading from that perspective. I never like starting new trades when we're up this high. I never do. I always like the blood. I always like blood in the streets, pullbacks, market's going to end. We're going to roll the shit down and, burning tires in New York. I always love that trade. Coming in at 12 o'clock, we'll see if we can get more ramping into the close today. Just one quick second here. Look at a few things here in the background. I'll go back and read his stuff here in a minute. I shifted away from Vol's because I have the same feeling about it. Rip faces off and then kind of, I don't know if it's exactly Volmageddon. We're gonna go look today at we're gonna go look today as a group at the late 1990s. And we'll look at Volmageddon too. Hang tight here. Come on, what are you doing? Come back here. Dude, what is going on? I'm having real like problems today. What is that? There we go. Like just start shanking these guys. Like we did this right inside of we did this last year too. We traded like 560, went vertical to like 568 or 568. And they tried to sell us down into like we traded 568 right into the 26th of September. We just kept slamming into it and then rolled down. And then we fucking blasted north to like 579, 580. And we kept going vertical too in like October. Hang tighter, guys. It was very similar. 7th, 26th. Wait a minute. Thursday, Wednesday, Tuesday, Monday. $12.30. I'm looking for lower now to 12. Am I getting some puts here? Hey, puts. Oh, wait for me, you asshole. Hold on here. I'm just trying to stuff my face. I gotta eat. I'll get less bearish near like 130. I'll get more bullish at 130. I'm bullish here. I'm just not bullish in the moment. I'm bullish on the day. I realize that you think that it goes vertical, but it doesn't. Hopefully I can get a call spread for Friday or something. What up, Pac-Man? How you doing, brother? I'll say hi to you. Give me some of that blood. Yeah, 665. There's definitely sellers here. Every time you go into like a 5 or a 0, you're going to see this. These fucking sellers are going to step right in like 665, 670, like 665. They're going to come out and play. I would. If I was sell side, I would. Like we're trading 665 right here. They're going to come out and play. Like there's going to be an auto sell on every 5, every fucking 0. So just wait for the sellers to be done. We'll pick it back up again and go higher. Let's check this 30-year. Goddamn 30-year keeps climbing. Goddamn TNX keeps climbing. Let me read the last of Scott's note here. Yeah, the 0 dates. I posted that on fucking Twitter this weekend. It was insane. Like 2/3 of the goddamn volume is retail options on SPX on the indexes. Not even fuck SPX, just like indexes. 2/3 is retailers. Yeah, 60% of daily options on all indexes. Retail has become a major vol smashing swarm, printing their own homemade QE every day. Yep, 100%. With sharp ratios that are far greater than trading stocks. Yep. Yeah, it says from the call side, as I explained a couple months ago, he explained this before it hit the before it hit the Bloomberg news. I was shocked when I saw the algorithms being traded. I was in a meeting and I was watching this guy from BlackRock this like developer from BlackRock was showing me setups that he had made for retail traders, and they were trading. What they would do is get funded again and again and again and again, and then they're running the same algorithm again and again and again and again on all these funded prop accounts. It was insane to watch. Yeah, the 10 a.m. magic. It's insane to watch it too. Like the 10 a.m. and 12 p.m. flows are fucking insane. And it's like all basic. You know what the fucked up part of it is too is that it's all simple shit. Like the rules that people have now to trade this stuff are so simple that everyone's in on it, right? Like everyone's in on the fucking trade. So if like the right rules are met by this time period during the daytime, you long. If the wrong rules are made at this time period of the day, you're short. And it's like massive fucking volumes twice a day. You can literally just go to like 10 a.m. and 12 and just wait and see if we start heading down or not, and take the trip higher or lower using just basic rules. Hold on, I'm reading some of what he's saying here. Watch out for a roll into 130. I could sweep. We've got a I don't know if we can get this low, but there is this little sneaky Pete right here, 661.50. We could roll that whole thing. I can't guarantee it's gonna happen, but it could get shanked here. Yeah, he's talking about hedging inside of this post that he made this morning. I don't need any more hedging. I'm done. Like I've paid for my hedging at this point. I got hedges. My only issue that I have here is that they probably won't print unless we go under 632. I think I'm hedged fine. I'm not adding any more hedging to my portfolio. I'm just looking for dips to buy. I've got an exposure to 590. He's talking about 590 in here. I have exposure from 632 to 590. Otherwise, I'm fucked. I'll make zero. I took a convexity hedge. Like I have to be down there. It was so cheap, I had to take it. Come on down. Come on down a little bit. Come on down to like 130, and then I'll buy you. Please don't blast my ass at 12. Pay close attention to this here at 12 p.m. Check this VIX 9-day. Check this VIX. VIX is fine right now. It's on a VIX 9 days on a cluster though. This is VIX 9 day. VIX 9 day climbing with price. Spot up, vol up type such scenario. What's VIX 30 day saying? Yeah, fucking VIX 30 days ready to rock too. I mean, VIX 30 day looks like it's coming too. Like whether we do spot up, vol up or not. The daily is trying to flatten here. You can see right here the weekly's crossing the monthly too. Dude, pay me some fucking puts, man. We're going to need to get down a little bit deeper to make some money. Is it just me? Oh, we got Stephen Rand speaking too. Says he speaks at 12 o'clock. Have you guys read the Stephen Moran? Have you guys read the Stephen Moran thesis? This should be an interesting speech. He speaks at 12 p.m. I've got it on here in the background. He acknowledges that Trump 1.0 tariffs were fraught with danger and that we paid the price for it in tariff 1.0. He acknowledges that those same dangers are still here this time around, although he thinks that we can... there's an eye of the needle trade. I'm assuming he's going to talk about that today. Find out here. It's like a little bit up here. Hope not, though. That's right. Get sucked down in the depths of hell till 1:30. It's so weird. I talk about this stuff in the weekends, and then it's fucking front page on Monday. No company is safe. Trump's H-1B shocker hits tech giants that work with him. They require a $100,000 fee for a type of visa used extensively. Holy shit. We're grifting on H-1Bs now? These companies are already grifting on those H-1B workers. So bad. I know a guy who has a bunch of H-1B workers, and it was, I couldn't believe the shit that I saw. A tech guy, a guy that I know that's got a tech company. Yeah, get rid of that. We're down, going down, baby, down, down. Get down. down into the half an hour or into the hour. Get down into 12 o'clock. Down. That's right. Get down there. Fucking pay me. You ain't paying me shit though. We gotta freak the bulls out. That means we gotta go and trade 641. I mean 661, excuse me. We need to go down into 1 p.m. My puts are like, puts don't pay. Fuck you. Just buy calls, bro. This whole move right here, I'm not making any money. Pennies. Shank them then. Make them feel shame down here. I'm telling you, they're up there. I'm not bearish here, but I'm telling you, they're gonna try. They're gonna try to sell like every 5, every 0, as they get squeezed out. They'll just be fuck you, selling 65, selling 70, selling 68, 672, 675. They're just not gonna stop. We'll take a look too at 2017, 2018, into maybe 2019, maybe Trump tariff 1.0. I think we're more in the 90s. Like, and it's not just this trade either. It's like I think it's like a hybrid of all of this stuff. You've got like long short operations that need exposure. We're aware of that, right? Buy everything. The buy everything for yield trade. I see that. I see some of the Volmageddon stuff in there. I don't think that's that hard to see. But I see more of the like the bubble trade. We're not in the bubble. I know that. We're not in the bubble. I can tell you right now. But if we enter the bubble, what does that trade look like? And that trade wraps all that shit up like a nice package, where it gets violent, where it's like big giant moves higher, big giant moves down, big giant moves higher. We start smashing into like 720, maybe even higher. But those moves are no fun either. Those moves aren't easy. They're not fun. You know, all of a sudden you're going up 50% and then you're down 30%, over the course of a few weeks, 3 to 6 weeks. And you're just getting fucking annihilated, like too scared to buy the dip, too late to buy the rip. Come on down, dude. Gotta cool some of that stuff off in here. I'll come back to buying a dip here in just a minute. There's no fear here either. My calls haven't moved, even on this low right now. My calls have not moved from up here. I started buying calls or our puts right in here. Where my stops are right here. See if they try to buy this back up again. So you can see that. That's not good. I would have liked to have seen this break here. This looks supportive. I mean, look at that 1 minute triggers coming straight down with price. I got stops on now. Watch out for the squeeze higher here. This is not bearish. See it? All the way back up again. If we do pick our heads up right here, if we just get that tick, you want to get long again. Watch this price action here pretty closely. Matter of fact, that don't matter no more. This is the only thing that matters. Hell yeah, NVIDIA. Still no Moran speaking yet. That is no bueno. We're going to squeeze up. Coming in for another all-time high here. This should be continuation to 665.50 right here. Coming into R1 now. 665 trading right now. It's trading 6681.93. Second target hit. I'm gonna have to fucking wait until 1:30 on the other side of this. They're gonna smash us up here. I'm looking at this 4-hour candle and I'm like, there's no fucking way. They're gonna blast right through this shit. So what they're gonna do is they're gonna grind us up here. There's that 1 minute triggers coming up from from the bottom here. And it's still not done going up here, guys. They're gonna push this for like the next hour and a half. They're either gonna push this down or up. We're not gonna roll here that easy. Fuck, man.
office estimates found a
Sorry about that. I missed this.
reduction in revenue and 130. My view is it's better to move there more quickly than less quickly. It's not a panic. I think a panicky move would be something like 75 basis points or even more. I'm not panicked. I just see that the risks grow the longer.
This is Stephen Moran.
You have company among your new colleagues. You have company among your new colleagues at the Fed in your neutral rate forecast, but nobody wants to move quite as quickly as you do. What is it that concerns you about the labor market?
Well, we learned that the first half of the year was not as strong as we would have liked it to have been. We learned that the labor market continued to lose momentum throughout last year and into the first half of this year. And that, to me, means that even though I think that growth is going to pick up for various reasons, there are concerns that, hey, things have been moving in the wrong direction. And if you keep policy this degree of restrictive for too long, you're not going to allow things to move in your direction. And so you're going to create a situation where the gap expands. And so in my opinion, it's imperative that we get closer to neutral quickly. And so I thought sort of a series of 50s to recalibrate interest rates was the appropriate policy.
And you don't see that as panic?
No, I don't see that as panic. I mean, if I were panicking, I would tell people I were panicking.
All right. A lot of businesses say that you talk in your speech and just now about how rates are too restrictive, but a lot of businesses that I've been hearing from, reading different reports and analyses, show that some of the pullback in investments is not due to the restrictive rate environment, but has to do with policy-related uncertainty. How do you counter that?
Well, I mean, I think that, there's a lot of different interest rates in the economy and a lot of different types of investment. And so for sure, there are parts of the economy that have been affected by that. And as I said before, I do think that that type of uncertainty is not totally gone, but I think it's certainly less than it was a few months ago. However, if you look at other sectors like housing, I think it's very clear that rates are the primary impediment to investing in housing and building more. At the moment, uncertainty.
I'm sure everyone's going to go back and look at the speech and the table. Can you break down just a little bit what your economic growth forecast is for 2026? Where do you see the economy ending the year?
So conditional upon on getting rates closer to neutral, as I had in the SEP, I think growth is going to be in the sort of in the mid-2 area.
And where do you see the federal funds rate?
Again, in the mid-2 area.
So if your forecasts are right, it might be time for rates to go up at that time.
No, because some of the so there's a difference between. So in the speech, I said 2 to 2.5% was the correct rate, but my dots actually have a slight divergence from that because some of the effects kick in differentially over time. And so there are some effects that, I think will be kicking in immediately, but then sort of the rent disinflation accelerates over time and the output gaps kind of ameliorate over time as actual catches up to potential. And so so it's not the case that you would sort of just collapse down immediately to 2 to 2.5% and then gradually raise back up over time. Because of that, there's actually my view is get relatively close to neutral quickly, and then there's a little bit more cutting next year, and then a little bit more cutting the year after that, and then sort of back up to neutral thereafter. So
I want to talk to you about a paper that you co-wrote for the Manhattan Institute last year. It came out in March of 2024. You name Lael Brainard specifically, criticizing her for being among those central bank officials who have rotated between the White House and the Federal Reserve. Of course, Fed officials most of them are nominated by the president, and so there's a natural link there. You named that Brainard specifically took one single weekend between a political role at the White House.
Grind.
As an independent member of the Federal Reserve. A quote that jumps out from the paper is, to pretend that one can easily shift between highly political and allegedly non-political roles without letting political bias inform policy is at best naive and at worst sinister. Governor Myron, how is your being on leave from working directly from President Trump different?
Yeah. So first, let me go backwards with that, right? So first, the on leave is just because it's just a 4-month job, and if it were a longer than 4-month job, I would of course resign, immediately. If there were some reason that I would think that I would be in this seat past January, I'd resign now. At the moment, I don't have such a reason. I think that there's no question that the Fed had previously gotten over its skis in terms of politics. And I think my analysis is borne out by the history. The Fed decided that it was going to be the organization to take on climate change and to join various international networks for greening the financial system. The Fed decided that it was going to get involved in credit allocation, deciding that this sector of the economy is worthy of credit and this sector that we don't politically favor is not worthy of credit. The Fed decided that it was going to intervene in heavily political issues of racism and police. And Fed officials started giving speeches about police brutality and arguing that we were over-incarcerated. The Fed decided that it was going to become more and more political along these lines, and I viewed that as a significant problem. That's the context in which I wrote that. The proposals in that paper are a package deal, a system of checks and balances, and everything that I wrote in there requires the entire system of checks and balances to be effective. If you just took one check and you ignored all the others, all you do is empower the one that you're protecting. So it all has to be viewed in the context of a total system as opposed to sort of in isolation. Now, I was asked to take this role by the President of the United States. I took the role. I will do the best at it that I possibly can. That means forming my own views independently based on what I think is appropriate economics, based on what I think is appropriate analysis. And because of exactly the things that you're discussing are why I want to be so transparent and as I possibly can be. I didn't just make the numbers up for the SEP, right? I just read.
This one's already done right here.
I know I probably bored people to death with this many numbers, but the reason why I did so is that people know these numbers aren't just made up. There's a reason every single line there has a number on it. And every single line has an elasticity, a size of the change, and then the policy outcome, which is basically the two multiplied by each other. And if you're going to disagree with me, I invite you to disagree with me. Tell me.
There could be grinding in here like this.
The size of the changing parameter is wrong. The changing variable is wrong, right? Because you may think that that there's other estimates of the effects of immigrants on rental prices, on rents, right? That are higher or lower, and I should be using a higher or lower elasticity, right? Like, please have the conversation, right? But I'm being as transparent as I possibly can, precisely because of the concerns that you just listed, and I invite everyone to do so.
Well, there's nothing boring about what's coming out of the Federal Reserve these days, I assure you. The president, let's talk about the context. You shared the context against which you wrote the March 2024 paper for the Manhattan Institute. The context right now is that the president has said many times that he will have a majority soon at the Fed, more of his appointees than anyone else. A lot of academic studies show that a loss of central bank independence is often associated with higher borrowing costs. Do you think that there is a risk to the president being so directly involved in selecting governors who have a certain view on rates? Let's set aside DEI and climate risks, but we're talking monetary policy, where the rate path should be.
Again, the president is entitled to his views on monetary policy. I think everyone's entitled to their views on monetary policy, and I'm delighted to hear views from all sorts. I think it's very important to avoid groupthink. That means hearing all views from all perspectives, and I'm very happy to hear the president's views. But at the end of the day, I make my analysis based on my own understanding of economics and how the economy works, and I just read it all out loud to everybody. And I would hope that everyone else who is appointed to the Federal Reserve does the same. Presidents have always appointed people to the Federal Reserve who thought about policy in a way that they wanted to appoint people to the Fed.
You did say on Friday on live TV that you had spoken to the president the day that you were confirmed. That was just
This could be something where we grind in here, but look for a huge squeeze here into right around here.
Here's what you would do if
like monster squeeze in here.
Asked you to vie for a specific decision at the Fed.
I would respectfully listen to his view and his analysis of why interest rates should be wherever they think that they should be. And he has been very forthright in his view, right? Which is not exactly the same as the numbers that I put out there. There is a difference, right? I would respectfully listen to his view. I would consider his arguments, consider whether they had any merit, and then I would make up my own mind based on my own analysis. And I would do that whether it's the president or anyone or any other political actor.
Would you share publicly if that conversation were to take place?
Well, as you can imagine, I've had a number of conversations with the president about the economy, about economic policy, over the last, 9 months, about the economy, economic policy. A number of those conversations have touched on the Fed also. He's never asked me to set policy in a specific way.
So
He's never asked me. It's never happened.
from my understanding, on the day that you were nominated, you were interviewed
Watch this closely here. This
by Scott Bessent, the Treasury Secretary, Susie Wiles, the White House Chief of Staff, and the President. Did the rate path come up in those conversations?
No, he never asked me. He never asked me to set policy in a specific way. He shared his view about monetary policy. It's the same view he says on TV several times a week. You know, there's nothing about his view about monetary policy that I know that you don't know. But he never asked me to set policy in a specific way. In 9 months.
In 9 months. So last Monday night, you're confirmed by the Senate. Tuesday morning, you had a phone call from the president, and then you walk into your very first FOMC meeting. Can you share just a little bit about what it is like to walk in? It was a historic meeting. On Monday, we didn't know who was going to be in the room. Would you be confirmed? Would Lisa Cook still be able to participate? What was that like?
It was cordial, it was collegial, it was friendly, it was respectful, and I was very appreciative of that. Everybody was very welcoming, you know, and it was a good discussion. And, you know, the way that it works is the staff make their presentation, participants are allowed to ask the staff questions, participants read their views of the economy and about appropriate monetary policy, and there was a forthright exchange of views and, you know, lots of a diversity of views, and I appreciated that conversation. And everybody was just very kind, and, you know, that meant a lot to me. And, you know,
am I losing this?
Thing.
I'm losing this. Hold on.
Which is that the way they have their view and they try and convince other people of their view.
Turn that off.
That persuasion actually tends to happen.
Turn that off. Turn that off.
With 19 people and just
Turn that off.
Never going to really reach a consensus on a lot of issues in that short amount of time conversation. It happens in between. Right? And that's what I'm trying to do today, right? Is I'm trying to tell people there's a reason why policy rates are too high. It's because there's been substantial changes in immigration. There's been substantial changes in tariff revenue. And these need to be incorporated into our economic models because they're relevant for how monetary policy is set. And that's how I'm going to approach my time at the Federal Reserve, is to lay out my economic arguments as clearly and transparently as I can and hope to persuade people by the force of the economics. I really don't think the idea that population growth affects neutral interest rates is a controversial view. This was a universally held, accepted fact. Sorry, probably nearly, there's always an exception. Probably a nearly universally held, accepted fact 5 or 6 years ago. Almost everybody would have agreed, sure, population growth affects neutral interest rates. Countries with high population growth have high neutral interest rates. Countries with low population growth have low neutral.
I'm going to sell the fuck out of this thing. Dude, I'm looking at this 4-hour candle. I'm like, get the fuck out of here. Look at that fucking thing. I'm selling that motherfucker so hard. Like, I'm not there yet, but I'm about to. Like, this fucking thing. I'm going to nail this fucker.
Governor Martin, you're talking
It's like
about
4-hour candle right here. You can get the fuck on out of that one.
you have a few short months, and it seems
Keep
like
pushing.
you have a caretaker
Like,
role
just
that
keep
should be
pushing. I'm waiting.
You've also come out of the gate quite strong. You had your dissent last week.
Keep on doing it. Keep on pushing to 130.
Airwaves on Friday, and now you've laid out in detail your view.
That's a fucking, look at that candle right there. What is this? The fuck is that right there?
Waiting on a board that is run by
That's 0.7%.
whose ultimate job is to forge consensus.
We're gonna go all the way up here. We're gonna hit this R3 right here.
You know, I just
R2.
try and think things through myself and ask questions to try and figure out.
This fucking guy's talking like, let's go to zero rates. Let's go to 0% mortgages. Let's go to fucking free oil for everybody.
Right? You know, the idea that you would be able to implement these things without significant retaliation was once very out of consensus. And now I think a lot of folks are coming along to that sort of to that view. The same is true of this. I will be as independent as I can in thinking.
Right, sweet. I think we got the paper trade thing. Hold on here.
In a political sense, but in an intellectual sense as well on the FOMC. And I view my job as trying to provoke an interesting discussion that will help the FOMC arrive at clear understandings of the way the economy works and where monetary policy should be set. It's a few short months, but you know, I've got I think a lot of content to work through in those months.
You shared that you're using CEA data right now, but you're looking forward to working with Fed staff as well as you move forward. You talked about population and other data points that you're looking at
Am I losing this fucking thing?
on the power of a dissent. We saw governor's dissent against Powell or the board. A few months prior, Governor Waller was on Bloomberg TV actually talking about how he views dissent as you do it once and then you've made your point and maybe you back off and see how the economy develops and how the discussion goes. First, I'm curious your views on that, and then I'm curious about how you're going to view the October meeting.
Yeah, I mean, look, I arrive at a view. I do a lot of careful thinking. I arrive at a view, and then I will sort of continue, until my view changes, I will continue arguing for that view. And if that means continuing to dissent, that means continuing to dissent. I don't view, look, I will colleague, but I don't voting with the consensus, even if I disagree with
We
it,
turned some of this stuff off here. We're
important than trying to argue for what I consider to be the correct policy. And if that means that I keep on being, I think, sort of sticking out from the crowd and sort of being more individual in my views and more idiosyncratic in my views, then I think then maybe the rest of the FOMC, then that's the way it's going to be. I'm not going to vote for something I don't believe in just for the sake of creating an illusion of consensus where there is none.
So depending on how the economy unfolds and what data we see between now and the end of October, you are willing to be the lone dissent again in October with 50 basis point dot on the plot, or are you hoping that more people join you?
Yeah, unless something changes that would lead me to change my economic view, right? I mean, something could change that would make me change my economic view. There's any number of things that could lead that. But as long as my current view remains my operative view, I don't see why I would vote for anything that's not my view.
You have a way of getting the attention of the world of finance and economics with the words and phrases that you use. A few months ago, it was the notion of a Mar-a-Lago Accord that had a lot of people buzzing, especially in the Bloomberg world that I live in. And now it's this concept of a third mandate, which is a word or phrase that you did not actually use. Let's talk about this. In your testimony, you brought up a piece of the Fed legislative mandate. You noted the moderate long-term interest rates that comes right after the dual that everyone looks at. Do you see the Fed using securities purchases to reduce long-term rates?
Sure. So let me address the two things you mentioned are related. Right. And so I just have a personality that I like thoroughness and I like to, sort of explore all the angles and I like to be exhaustive if I can. And when I wrote that paper on trade policy last year before joining any policy role, I was attempting to be exhaustive and list every policy I could possibly imagine as being able to narrow the national accounts. I never advocated for that Mar-a-Lago Accord. In fact, it wasn't even my idea. I was quoting somebody else's idea and gave him due credit in the citations and in the text as a result of it. And I underlined that it wasn't a policy proposal. It wasn't policy advocacy. But I like to be thorough. And so I included it. And it was, it continued to haunt me for many months after that. Despite that, this third mandate stuff is the same thing, right? I take a job seriously, and if I get asked to go to the Federal Reserve Board, I will look up the statutes and I'm not a lawyer, but I can read, and so I'll look up the statutes that govern the Federal Reserve Board, and I see that the Congress assigned the Fed stable prices, maximum employment, and moderate long-term interest rates. So when I'm testifying in front of the Congress, I will just repeat their own words back to them. There's nothing more to it than that. And I think most people generally leave the third part out because they think that it's implied by the first two, like that if you are going to achieve stable prices and you're going to achieve maximum employment, then moderate long-term interest rates will necessarily fall out of that. I think that's what most people typically do. They leave it unsaid for that reason. But just because I'm a thorough person and because I was in front of the Congress, I wanted to be respectful of their words and not my interpretation of their words.
There's been a lot of talk about the balance sheet. Treasury Secretary Scott Bessent has laid out in detail in a lengthy essay about the Federal Reserve and his views on it. We've heard about it from Kevin Warsh, a former Fed official who is in the running to possibly be nominated as Fed chair. I'm curious what you make of Bessent's criticism of the Fed's large balance sheets and mission creep that he points to.
So, I've also been very critical of mission creep. We talked a little bit about it before in the discussion about Fed independence. The balance I believe the balance
Hang tighter. I'm losing the show, I think.
is in part because
What the fuck is going on here?
that weren't strictly necessary. The Fed was still buying mortgage securities. I believe that became is in part because previous purchases that weren't strictly necessary. The Fed was still buying mortgage securities when housing prices were up double digits, or 20%, I think 20% year over year in the wake of the pandemic. So I don't think there was a need for the balance sheet to get as large as it has. I think the Fed has been doing a good job of bringing it, of reducing it. In my mind, though, focusing excessively on the size of the balance sheet is more like focusing on the symptom rather than the cause. And
Hang tighter.
a few days ago, my view is that the balance sheet size that you ultimately need ultimately falls out of the regulatory framework. Because if the regulatory framework requires a certain amount of reserves in the system, the Fed needs to provide that size of a balance sheet in order to allow the banking system to have the capital it needs under the regulatory framework. And so my view is that sort of focusing on the balance sheet size is focusing on the wrong thing, and that it's better to focus on to get the regulatory framework that you want correct, and then the right size of the balance sheet will kind of fall out of that.
Do you think that there should be more done to focus on long-term rates the way the president says? Using balance sheet, perhaps?
No, I mean, I think that, historically the Fed affects a broad array of financial conditions, including long-term interest rates. And as long as you are, sort of not near the zero lower bound, I think that there's no need to sort of move towards trying to capture additional instruments.
So you agree with that the Fed has a dual mandate. There's confusion out there after you listed, like you said, read back the law to Congress, that there's now a third mandate policy, especially with the president talking about lowering long-term interest rates.
Yeah, well, look, Congress gave the Fed those words that I read in front of them and that you quoted before. Now, as I said before, I don't think moderate long-term interest rates are necessarily an action item at the present, right? Like, I'm focused on bringing inflation down sustainably to 2%. I'm focused on preventing deteriorating from market and an output gap.
Dude, what is going on with this guy talking here?
An action item at the present, right? Like, I'm focused on bringing inflation down sustainably to 2%. I'm focused on preventing deteriorating from market and an output gap, and just an item of completeness. But it's not for me to tell Congress they didn't say something they said. Sorry, they didn't enact something they enacted.
One thing that the president is acutely focused on is housing costs for the average American. Is there anything more that the Fed could do to influence mortgage rates or just alleviate some of that pressure in the economy?
Yeah, so as I said a moment ago, the Fed controls the short-term interest rate, the overnight interest rate in the economy, right? And financial conditions more broadly across a range of items, including longer-term interest rates, credit spreads, the dollar, mortgage rates, right? They all sort of can be responsive to changes in short-term interest rates. And so if the Fed continues to ease policy, presumably that will bring mortgage rates down to an extent. Right, bringing mortgage rates down will help, unlock additional home building, will help unlock additional investment in housing. However, the degree to which mortgage rates come down versus other financial conditions loosening, I don't have a firm sense of exactly which one is being pulled at this given moment.
Talk to us a little bit about the Fed's inflation target. Do you think that the 2% range is the appropriate goal?
Sure. So first, let me reiterate my commitment to bringing inflation sustainably down. Second, let me say that any prospective changes to an inflation target should only ever be entertained after a material period of the Fed achieving its inflation target, to avoid any appearance of moving the goalposts. You should entertain that idea after being target for time. My view is that measuring inflation is incredibly difficult, and when you get into the guts of how inflation is measured, there's all sorts of things that are strange, right? So, for instance, probably a lot of people in this room in financial services, right? So when the stock market moves higher, financial managers, advisors, asset managers, they get more income because the base is higher, right? And it's sort of a constant fee times a higher base, right? The way that inflation is calculated then generates inflation in the portfolio management section of the personal consumption expenditures index, right? So the fact that the stock market goes up mechanically leads to higher inflation the way it's measured, right? So, you know, obviously, if you'd took that literally, the Fed would hike in response to that, right? So my view is that that's sort of like a weird thing, right? And I just think that inflation is very, very difficult to measure, and so having a very precise inflation target like that can lead to excessive micromanagement. Instead, if you look before 2012, the Fed didn't have a formal target at all. They pursued low and stable prices, right? To me, that's an interesting way of doing things also. You know, the inflation target was really introduced in 2012 as a bulwark against deflationary risk in the wake of the great financial crisis, when the Fed was at the zero lower bound and felt the need to further credibly enforce a commitment to positive inflation. And so, you know, I think there's sort of very interesting questions about how would you actually want to set monetary policy over the longer term. But I do want to emphasize that these questions should only ever be entertained in terms of changing the framework after the Fed has successfully achieved its target for a sustained period of time to make sure that there's no appearance whatsoever moving goalposts.
Governor Myron, thank you so much for taking my questions.
Great. Thank you all very much. Let's start with a round of applause. Thank you, Steve, for your introductory comments here in the room and online, that the remarks that were delivered today will be available on the website and on the club's website too, so you can link directly to them to have a firsthand copy of the remarks and also the slides that came with it. So thank you again for all the time today. We're also pleased to announce on behalf of the club and its leadership that we have a robust lineup of speakers on tap for this autumn. If you turn your programs over, those of you in the room, you can see a list of those that are coming up, and on Zoom, you can see on your screen. Just a couple to remind you, September 29th, we have Wal Sawawan, the CEO of Shell. October 30th, we have Jameson Greer, the U.S. trade rep. He was scheduled earlier this summer and had to cancel to go off to Switzerland to the discussions with the Chinese trade rep. So we're glad to have him back on the schedule, coming to fill us in on what's going on with trade. And we'll also be updating you on other events as they present throughout the fall. Let me just also take a minute now as we conclude to thank and recognize the 431 members of the Centennial Society who have been so supportive of the club in the past, provides the financial backbone of the club. Thank you for attending today. We appreciate your attendance, and those in the room, enjoy your lunch. And for those joining us on Zoom, thank you very much, and we'll see you soon. Thanks.
Organically, we're pretty close to zero. And so all of that growth is going to come from immigration. If immigration's effectively shut down, that's a headwind to the supply side of the economy. So hopefully,
I think that's it.
In time, policy
So you can see that right there. We're not done going up. We're going to keep going. We're going to keep climbing the wall we're here. You can see that. 1230. This is the actual hold right here. Can go all the way down here, but we should continue higher. I don't see the roll, so Keep an eye on this for a roll down. I'm not sure we're going to roll down here, but my only fear here is that the 4-hour candle ends at let's go down here and look at this together. So 4-hour candle is ending here at 1:30. It doesn't have to go. I'd like to see this go here and fail, but we ain't losing that either. We're gonna stay up here. All this should stay, and then trade 7,000. It should be something like this. I mean, there can be an argument made that would come down here for 1:30 and go later, but even so, talking about like this, and then that. Even if there's a roll down here, we could do it right now though too. Faster the better. We don't have a lot of time. We only have 4 hours to do that. We only have the 4-hour candle to do this, so this is still valid right now to go up here and trade R2 for target 2 and 3. If not, if we don't do it at 1:30, let me just show you this here. Here's the 4-hour candle right here. Initially, I was thinking that we could roll this thing down. If we stayed underneath this 66.85, we could roll this down, take the halfback trade, and then go back up. But that ain't going to happen. Even if we pull this back, we likely hold 66.85, I think, or we can hold to make that blast up higher here. There's a door closing right about here. There's a door closing right here, even if we roll down into this. Let's move this over. Let's move this over for now. But there is a door closing at 1:30. To pump higher. We'll do this one here. Like dotted. And even if there is a roll, though, if we lose this here, even if there's a roll, it's still positive to go higher the next 4 hours. A minute here. Look at that fucking drop right there. there's no requirement to do this, but if we do this, I mean, we can do this right. Fuck it, we can do it now. And even if we don't, we get trapped in this 4 hour. It doesn't matter. That next 4 hours is still setting up for a fucking huge move. The only danger here is that the trigger. You only have the 1 and 5 minute trigger here, but it doesn't matter. This is closing the fucking door to go higher, without a doubt. Hang tighter, guys. Like blast down right there. But then you get, you just need that one move, just that one tick right there. And this could continue into like Tuesday close. Tighter. Six. Like there's a smaller one in here. I just gotta draw this better here. Hold on. Now, the only thing to say on this would be this 5 minute trigger. See this 5 minute trigger coming up right now? When this 5 minute trigger comes up, it has to hold. If it doesn't hold, we're gonna fucking blood. It's gonna be Shank City. Just let me check 1 hour really quick because we're putting in another hour right now and another 4 hour. I think we're gonna put in a 4 hour. The next 15 minutes. Let's wait until 1:30. We'll put the next candle in. Like forget that 15 can go bye-byes. This one now becomes a 1 hour here. This becomes a 1 hour candle right here, 12:30 to 1:30. This one will become a 1 hour right here. This is the same operation as earlier this morning where you try to sell it down here, but it ain't gonna matter. Like, see what's going on right here? Like, see how this 1 minute is holding up right here? Watch this 1 hour or this 1 minute trigger. See, we're not losing this 1 minute trigger with any kind of. I mean, we lost the 1 hour trigger, but that's not down here. That's bullish. It's like this part isn't even required. Here, hold on. It's not even required. Like this is just splitting hairs over here. We could literally grind sideways here. And then just wham, wham, start taking them out again. Let's watch this closely here. We could just grind in here on the side. And this low right here is not bearish at all. It's super fucking bullish. The only thing that I would make, the only commentary I'd make would be if we break below the 5-minute trigger, it's going to be a fucking bloodbath, but none of this looks bearish. None of that structure looks bearish. It all looks bullish as fuck. The only warning, I don't know if it's not a warning, but the only other thing to say would be that it's a pretty big drop right there, but it's almost 0.5%, 0.42, but that door is closing right here. You can see it right here. That squeeze up right there, like even this pull down right here, the second leg wasn't bullish, right? You see how I left this here intentionally. If this was bearish, you would have seen the one move here, and then you would have seen a bloodbath right in here. And that did not happen. Same thing is this same thing's happening right now. You can see it. Just gonna watch it, see what happens down here, and you can see it right here. This red trying to stop us from going down here. It's gonna just try to send us all the way up to 6,700. Oh, hold on here. Sorry about that. See that right here? It's like big fuck yous. We'll chase this if we break above this. We can chase it again, but not till then. You have to see the new. You have to see the new price. You have to see the new price here, and then we can buy that right there, but not unless that happens. So don't touch it right now. Right there so you can see it. Like none of that's bearish. This is all nice right here. You see it? No new lows, no new break of trend, no new lows right there. Buying that right there, buying that right there. Watch out for a squeeze here. Close. Start this next candle off here. Strong, I think. Hold on. Watch out for another squeeze coming up here. This higher. Watch that one right there. This one right here and that one right there. First target hit. So you can see it right there. Not a fan. Hang to one second, guys. Sorry about that. I'm in the middle of a meeting here. I got some like a meeting going on about this paper trader in the background here. See if this holds or not. This target's right here. I wouldn't trust that this is a roll right here yet. And even if it is, they've got this whole thing. Like we're closing doors here on sellers. Still up. Just dropping bombs in here. Look at that. Look up here. Bomb. 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 Like rage as we trade up here. This is trend right here. We're above trend right now. Top of the key trend right here. Right here is top of the trend. Like all this is still valid here. Even if this takes into tomorrow, the way is higher. High there was 669,394. There's a giant like this whole 4 hour here, this new 4 hour candle here. It's there ain't nothing there. There's like nothing here. I'm watching this 1 hour right here. It's also it's 206. Let's take a look at we're gonna look at the give me a second here. I mean that's fucking banging right there. The thing to look at here is this 4 hour candle. It's massive. You might think like short this thing into the depths of hell. That would be the idea. You short this into the depths of hell. And probably want to short that one in the depths of hell. This is what somebody's looking for is right here, but I don't think that happens. You can sweep part of this candle right here for 665, which is kind of where that 6685 is on SPX. And just look at how far. I mean, this is the one danger is this right here. As of right now, theoretically, we can easily trade all this and still be on trend. Same thing back here. I was watching this 4 hour earlier to see if we could roll earlier, and we didn't. I was watching for this one to roll and do the half trade, and it didn't. It stayed up here in this 4 hour, back tested, went higher. Now the key point here is 1232. No, this is on Monday. So this 1232 right here, right? This half hour right here. This is a door being closed. And of course they're not happy with this door being closed, right? Let me just show you trend over here too. You can kind of see it right here. There, right here. Like this is big trend up here, but then there's another trend. This one right here. And we're skating above it right now. You can see right there. So we can use this trend right here, but we can also use, you see that trend we're coming in off right now? They're just like sell, 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 bomb to the downside. But I don't think you can bomb to the downside. Like this 1230 here is 6685. And the hourly and the half an hour are racing higher right now. So maybe just consolidate a little bit. But even then, like this coming up right here, this holds all that in place. And we're only at R2 right now. That's the other part of this is like for expansion, for the sake of expansion. 669, 670, 672. And there's a race for this right now. Like tomorrow close. Like I'm serious. We could just start going vertical, like vertical. I'm not kidding. So it's a hard thing to trade. It's not easy to trade. All these big moves up here. This is a giant fucking move. Look at that. And if you look at it from this perspective here, this is your 1, 2, 3, 4. This is like a bigger 1, 2, 3, 4, 5. Like 1, 2, right? 3. This could be part consolidation, but the key point is that this next move is going to be fucking huge, or it could be. Theoretically, it could be monster, with a whole nother leg on it. Like you're talking like, you know, way up here in the 70s, and then 672, and then 676, and the target is. I gave this to you this morning, but the target is. Let me get rid of this. Pivots. Get rid of all that. So the target. Let me go at an hour here. If we should start cranking here soon. The target is. I mean, unless we roll under this fucking thing. You know, like 670. I mean, we got 670 up here. We know they're going to sell the zeros and the fives, right? So there's 670. And they're going to sell that no matter what. It's auto sell. In cash market, they'll sell it, but not in overnight. So there's 670, right? And then we've got 672.50 right here. Sucks because I'm gonna have to keep writing this every fucking time. And then the sell is at 675. Somewhere in there. Let me see if I can measure it. Hold on here. Weekly. There's our 2 right here. For the weekly expectation is right below the 672.53. The big one is 680. I don't think we hit that now though. That's Tuesday, 1600. I mean, it should go fucking vertical. I'm serious, like that. It's something like this. I'm just trying to put that back. Like we're like we're about to go like straight fucking vertical. And then what's crazier is this is do you see this A right here? Or this diamond right here? Like the next move after that is like to 650. Like, I kid you not. It's like, yeah, it's right here. And then 648 by the time it gets there in 2 days or something, 650 right here. So by the time this gets up here, we close this day out today, right? And hold on, let me go back down here. Like this fucking thing right here goes. Somewhere up in here. But you'd think that that would be it, but it's not. The next trade is like, like straight vertical again. Here's Friday, 26th. This is our actual QQQ up here. This could go fucking violent, like. There's Friday right there, and there could be the bloodbath in here. None of this is required, but right there. It could literally go just like that right here. This Friday, 1600. And what else is so this would go like there's your 6800 right here, and this could also be like Tuesday. So there's the Friday, Monday of 29th, 30th over here, Tuesday. This could take into that period to get there, but I don't see. And what's fucking crazy is that once you're up here, this stuff starts like, like I see this trade here, but even so, it's only to add. We could fucking go sideways and then Rampo-Rama. That's a fucking huge move right there. What is that right there? That's a fucking almost a 4% move. You know? Oh man, dude. I don't even want to look at that right now. That just sounds so fucking crazy. I would say look at this move first, and then we'll look for. You can look at it's happening down here too. Look at it down here. Like it's just coming right back. Like slam down here, slam down, right back on the 5-minute. And not only that, but there's a door close. Not a door technically, but let me just show you what it's looking like here. So we're trying to print this right here. Like there's 6,800. Here's 6,750. Target's like right here. In a hurry too. So the entire game right now is get above 6,700. So there's the entire game right now is just get above this, hit that 6,700. You can get sent down on 67. You can blast up, trade 725. But you start like basing that stuff. It could get violent. I know it sounds crazy, but there's not a lot of time here. I know, yeah. Like last week, you're like, "Oh, Cap, can we go up 100 points in like a week?" Someone on Twitter was like, "Can we do that?" I'm like, "Yeah, we can." Like, yeah, we can put 120 points on the fucking board in under 10 days. We can put 300 points on the board. I'm not sure that's going to happen, but the bigger fear here, from me at least, is, I don't want to call this because I can be wrong. There's a million reasons that I can be wrong in this. And you'll be like, "Oh, Cappy said we were going there and we didn't." Like just look at this really close here. You can see them actively trying to close the door here. Like close the door in 6685. Bump us up over here. And once that door is open, we don't have a lot of time left. We just don't have a lot of time into the end of the quarter. So I'm like, yeah, if we were gonna, go into the quarter end, they could take like the day of, like oftentimes on the day of quarterly OPEX, they run so many fucking 0-date calls on this really bearish shit that they send our way. If you don't know this, in quarterly OPEX, right? JPM and a whole bunch of other characters run a bearish seagull on the market. So there's a lot of flows that come in on the last day of the quarter that are very negative. And so even on like, here, let's go look at this here. So even on like, even on, where's the 30th? Even if we're just closing doors back here and we're just floating around, you're like floating around. And then, like the last day when they're rolling all of this shit, what happens is they open all of these trades that are extremely bearish, but they also throw in a fuck ton of 0-date calls. Now, those 0-date calls that they throw in, you normally don't see the effect of them early in the morning, but towards the middle of the day, end of the day, you do. And so it's not to disturb the market with all this bearish. It's not quite bearish, but like hedging. It's hedging, and it's meant to stop upside volatility and downside volatility. It kind of encapsulates the top and the bottom of the market, or attempts to. But that last day, we could fucking ramp due to it. I wouldn't be shocked right here where we are right now. I'll be honest with you. I wouldn't be shocked if on the 3rd, at some point of not the 3rd, excuse me, the 30th, at some point if we're sitting right here. 678.50. I wouldn't be shocked to see us up here. And when I'm looking at this, I posted this on FinTwit the other day. The only thing that scares the shit out of me is this sell right here, this 670 and this 675. They're gonna fucking beat it, and I can't say it's not gonna do something like that, or even worse. Like this is all just hanging out down here, waiting for a shadow realm. The 670, 672, and it's like, and then we're actually back up there later. If that was the case, I would want to see the tick. Like poke your head up. And you could theoretically say, yeah, that the hourly trigger will hold us up here to slam into that up there. But I'm telling you, it's real. it's definitely real. In trading, it's brutal. I tried to sell this earlier twice, I think. I tried to sell it twice earlier. But it ain't gonna happen. Just be very careful. If you're a bear here, I titled this fucking show today. I titled this show today, Squeeze 'em. And if you look back on like March, April, we did something like this. Now in March, April, we didn't catch the squeeze until after. We didn't catch this number until 2 weeks after, into October's OPEX. So it is. There are other outcomes. There's another outcome where we come up here, right? Blast up here for 675 into OPEX, quarterly OPEX, and then we come back for this shit later. But like, there's doors closing here right now. I'm warning you. There's a fight to get above. There's a fight right now to get above, not just get above, but see these targets right here. This is all in because we've rolled higher. This is all a fight to hold 85, get above 6,700, and then defend this. The idea is you defend 6,700, and that's the trade. 6780 on SPX. So, and I can't tell you that we're going to do that, but I'm going to tell you that, I'll tell you where the risks are. The risks are down here. you break above, open the fucking door to 6,700, come back down here, and then we're off and running. Possible. It's also possible though we go up here and that's it. We're just building a fucking shit mountain right here. Poop Island starts on 6,700 to trade 6780, and it opens up a whole nother fucking can of worms. Like, if do dealers come in and sell 678 in a fucking huge way? Everyone's positioned now for 680, 720 end of year. Do they front run this whole fucking thing? Like November. I'm not shitting you. Like, we could go fucking not quite vertical, but if everyone's rolling higher to 720, or excuse me, 680, 720, and they're buying or opening all these fucking calls out in December, February, or whatever, this market could start fucking moving. And I mean moving. And the sketchiest part is whenever it comes back, it all comes back. The whole fucking thing comes back almost every single time. Let's go back over here. I mean, just look at this. Just look at that right there. Like right here, right? And now it's like pound all this out last week. And they want to close the fucking door again. They're literally looking to close the door again. I still think we need to look out for this roll here, but I think this violence is easy. It is dangerous as fuck. I want you to know that there's danger in here. I gotta say something to you guys here. Like, there is 100 fucking % danger in here. I know. Danger. And there's more danger. There's more danger right here. There's like danger again. Somewhere up in here, like 678.5. And they're gonna take a swipe at it. You fucking they're gonna sell 670 without a doubt. And it could get violent. Like, this could be way down here, and this could be way up here. And then that brings in another question of like 678. So that's basically 680 to 720, right? And it's just like a giant ass fucking slap down here. That could bring your fucking 604, believe it or not. Let me check this again. I mean, this is your one right here. 1, 2, 3. This 3 could be explosive. And if you're counting this like this, it's like, if you count this how you should be counting it, it's like, this is your 1, this is your 2, your 3 could be fucking stupid. It's probably where they're seeing the 720, like right now. Like, I kid you not. Like that big move right here. Nope, sorry about that. Like this was your peak right here. See it? There's your A. Here's your A right here, or your diamond or whatever. If that's the case, and this is number 3, you're talking about fucking going vertical. I mean fucking vertical. But hold on here. And see this A right here? Like this all works out just fine too. I mean, I see it. Don't get me wrong. I see it. It's hard as fuck to trade. So I would say that, you know, like I would say 670 is our first target. I would say look for that, you know, like danger is at 670, and you gotta see if they come in to sell. You really do. Like, you gotta come in and see if they fucking sell. They took a swipe at it already. They've taken a couple swipes at it. Let's look at this on a 1 minute basis. Like, I wouldn't be shocked to see us just start going vertical all day tomorrow too. And that sounds crazy, but here's 1500. I don't know if you guys ever seen big squeezes like this before. If you never have, they're brutal. Like, take every fucking stop kind of a thing. I would say this to you that when we get close to 670, let me go put down here and show this for you. When we get, so just down here, we get close to like 6,700. You might want to take a little bit of caution as we get there. But I think we go through it though. I really do, because I think it tells you we're going to 6,800, 720. Even if it takes us a month to get back there. Like, the 670 is very possible. And you can see him taking shots right here. Took a shot at it right here, took a shot at it right here, taking another shot here, here, and here. In that conversation from that new Fed guy, that Fed guy is the pick. He's you know, he wants to print, so that doesn't help us from not squeezing. That forces us to squeeze, because he's telling the market we're going to cut rates. And that means inflation is going to run rampant, and it also means that they're going to price it in. So be very, like, if you're like truly bearish here, be afraid of continued squeezing higher, like into tomorrow's close, like Tuesday bell. You could even say maybe Thursday. That's possible. Let me just check this one more time and just peek at it and see what am I missing here. And you know these fucking guys are gonna wanna. When is this right here? This is. Let's go back here and look at this really quick. Just want to check this. I mean, look at that's fucking relentless. So let's rein in this. Let's rein in a little bit of this crazy town right now. I just want to rein this in because we'll deal with the rest of it later. Oh, hold on here. Let's do this one. This Tuesday close. We'll do 670. And we'll do this one. We'll rein this in for now. But I want you to know that you can see it right here is the half-hour trigger, hourly trigger coming up. Look at this one's coming up right here. This one's a little bit flattening here, so you can see a little bit more down move here once we get up there. But I want you to know that. I want you to know a couple things. I want you to know that we'll get rid of danger. I don't want you to freak out with that either. I just want you to know that. Let me go back here. That there is real danger of like going vertical, getting above that 670, looking at that 670, 680. And then we're not there yet, but there's danger of rolling higher above 680. They already have rolled above 680, 720, 700, but you start seeing like huge influxes of calls coming out. And, that's how you create that whole environment. Like that whole environment where like, hey, we're at 720 and it's fucking mid-November or something. It's very possible. So I can't tell you that's going to happen, but chase, baby. That's what they're doing. So we had price action like this during March, April in the opposite direction. And the downside moves were just as violent. So I gotta tell you guys that, like, the upside moves in March, April were just as violent as the downside moves. It was like fucking straight down, straight up, straight down, straight up in violence. So if at any point we start losing the 1 in 5 minute trigger, like conclusively, and you start, did you remember the last 2 times they tried to send it down and I said, oh, that's not good enough? You got to see that too. Like, you got to see if they can, with conviction, break through the 5 minute trigger. If they don't, this is the result every time. So we'll monitor it. We'll monitor it every large inflection point. But twice today, 3 times now. 3 times today, I've been like, nope, that ain't good enough. We're going to go higher. And right now, I'm noticing it again. I'm like, they're going to send it again. You can see it right here. You can see it down here if you want to look down here at me again. You know, they're just not fucking. They're not fucking doing it. Like, this is building walls right now. Like somebody's in a hurry, right? They're telling you, fuck you, close. And not only are they telling you that, they're telling you, here's target 2. We're going to smash that one, or at least price action is saying that, right? Smash this one, smash that one, because the calls are rolled higher. And until they fucking stop buying calls, you know, let's get above 6,700. And on that same note, let me show you something else that's going on here in the background. So I've been watching the call volume all day long, and you know, the fucking whale is here. I'll show them to you. So like the one date. So the one date today is at 6675. Way lower. That's call gamma for today. 6675 on SPX. Right? Way lower, right? But then the volume on 2 dates. I'll show you where this fucking guy is. He's right here. Like the whale is right here. This fucking guy's buying 2-date calls. 6,800, 6,740. Like, this guy's buying shit. Like, when you buy shit like this and size like that, this is volume, not gamma. When you buy, when I never see this. So when I see this, right, this means ramp that fucker straight up. It's forcing dealers here to chase higher. So, and this is only, these are 2-date calls. 6690, 6,700, and then a fucking, like this whole thing right here is all meant to do only one thing. So here's 6,700, but this is all meant to create the chase. Normally we don't see this stuff. You'll just see like the 1-day gamma shit. All right, we're gonna go here. That's good. Okay, we'll do it again tomorrow. So there's a whale out there that's doing this. I don't know who it is. I don't know who the fuck is taking out 6,800s for 2 dates in that fucking quantity. That does matter. So crank it, right, is the word. And you're gonna chase. You're gonna chase it. You're gonna chase it all the way up. You can try to short it. You can try, but if you don't get the roll on the 1 in 5 minute with conviction, you got to close that shit because they're gonna straight up again on your ass. Let's go back to a 1 minute here. Just look at that shit. It's beautiful. It's fucking stunning. This is so we've got this target up here, right? 668. And we got another target right here. And watch this one right here. So we're skirting all this right here. As long as they hold this, there's no reason we can't do that. Like, there's absolutely no fucking reason we can't smash into this weekly expectation, get above the weekly expectation, and start cranking into R2. This is a weekly expectation right here. Like, weekly expectation, 672.31. Like, that's 1 sigma move on a weekly. R2 is normal. So 672.50 either front run right now by tomorrow close, Wednesday close, or by Thursday close, Friday close. Very possible. So watch it closely here. We'll watch it at target 670 or near it. Another $3 to go. And as long as that 1 and 5 minute hold, here's another one. This is another level broken or held. Here's another one right here. There's another one right here. And there's another one right here. There's one forming right in here. Just higher. Higher, 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 higher. Seriously. I think I posted something like this on Twitter on Friday. I showed a path to 678. And we're doing it right now, so I can repost it for you. This is what I had on Friday's close. Let me just look at it right here. I mean, look at this fucking thing. Here, I'll repost it right now. I'm going to post it. Jesus fucking Christ. It's insanity. Like, I mean, I knew it was possible, but I'm like, yeah, you know, like, they're looking to fucking just smash this shit. I just reposted it. That was the chart. That was the Friday closing chart. I was like, God damn, they start ramping this stuff. And it could be gnarly. Let me go back to a daily. Here's R2 right here. We're going there too. We're going straight there right now. We'll squeeze right up there. They're going to take every one of these fucking stops up here. I guarantee it. There's like nothing here is showing bearishness. Nothing. There's another all-time high right just then. We just got another all-time high right there. And there's zero. Like 3 times now I've looked at like, hey, can they roll this? I was in puts twice. And I'm like, nope, fuck that. Ain't doing that. Go long. And the 3rd time just now, they're doing the same shit. Like they're erasing any kind of bloodbath. So, and let me show you what this has to look like here. For that bloodbath to happen, right? It's not good enough rolling down to, let's say, the 5-minute trigger and then going higher again. It has to be with conviction. Like it has to literally be at this point, it has to be like a red bar straight through. I mean, not one red bar, but you get my point, right? You have to, like, with conviction, break that 5-minute. And they haven't been able to do that all day long. I'll show you one right here. This one right here was a prime one. Brought it back down at 11, right? All the way back down. Nope. No break of the 5-minute. Same thing down here. Nope. No break of the 5-minute. Same one right here. Right? This is at 9:38. Fuck off. Back test. Beautiful back test on the half an hour and hourly trigger. And they will ramp this fucking thing. So there's a new all-time high right there. If you're a sell side, you have to see, and we'll leave this one right here. You have to not only see the roll down, but you have to like get through it with like literal conviction. Without that, We'll leave this right here. We'll keep our eyes on this 6,700 down here and see if we catch a red bar, but it ain't looking bearish to me. It's looking as bullish as it can be. At least at the moment it does, unless I see something different. And I looked back this morning with you on the show, and I looked at the turn in March, April with velocity, and they just kept fucking pumping it. It was wild. So we'll hand trade it. Only up. Unless I see something, only up. And those 4-hour candles, like those 4-hour candles are telling you we're not coming back here for a while. At least that's what they're telling me at this point. The daily candle is going to be fucking ridiculous today. It's going to be fucking ridiculous. We should see some volatility in this too, and you could see a 0.5% pullback and like no blinking. You could see a full percent pullback. And no blink. Like you're in trend here. Let's look at where we are. Like at this moment right now. At this moment right now, right where we are. We could drop right where price is right at this moment. We could drop a 0.59% intraday, and we're still on trend. We're still going to moon, so you're talking about like this is a pullback. You know what I mean? Like just a pullback. Like still on trend. So if you want to even break trend within real trend, like from a daily trigger, like I think that's 3 or 4% from here. That's like 3.5%. And we have more to go. So, you know what's fucky about that is if you did a 3.5% correction, you'd still be on major trend. Like daily trigger is trend. So, forget a correction. Like that's not a correction. That's just a pullback. 3.5% pullback. You know how rare that is? Pretty fucking rare. Like pullback should be like a 0.5% to percent. We could pull back 3.5% right now, and that's not even a correction. It's just a pullback. On a 4-hour basis, we are here to trade 668, 670, and then 670, 672.5. And then down to 650, and then up to 678-ish, somewhere in there. So these ranges are getting larger, or the potential in these ranges are getting much wider. It's cool. I like it. Just letting you know. This is all making me think about like the late 90s. That's all I'm thinking about right now is the late fucking 90s. I went through the late 90s and I looked at that shit up and down and it was fucking wild. It really was. And the craziest part is when you go back and look at it, it's easier to look at, like in hindsight, it's very easy to look at and be like, oh yeah, look at up 30%, up 50%. Oh yeah, down 30%, down 20%. And it's because of this stretching that's going on. So if you like look back on this year, next year, and the year after, you could see like violence through that kind of proves that thesis that we're in a new bull market. So if you like scrunch up 2025, 2026, 2027, I don't know if I believe it right now, but if you did, you'd be like, oh yeah, you can totally see that move there and that move there and that move there. And they're fucking violent. Or they turn into violence. So we just got to hold this one right here. We'll watch it closely. The screen box. You can see the screen box. If we don't hold this right here, just note that I don't even trust the downside move to here. I don't fucking trust the downside move to there. I don't think that you could even get short unless you saw the break of at this moment, this in a new low. So you see that? Hang on tight, seatbelts. And we'll adjust these as we move up and up and up too. Panic buy everything. And these are the whales. Like, I'm assuming that this is the street long short funds that have to they have not caught up. And that is very, very, very close to what we did in 2020, 2021. They were short, like LS funds were like short through 2019, 2020, or like COVID. And they caught up at the end, and we went vertical. We went straight. And this also, like, all this shit harkens back to like inflation running a hot market, pricing in a hot market, pricing in the Fed making a big fucking mistake. And this Moran guy, in my view, did not help at all with that thesis. So I gotta call Volwiz and see what he's doing. Let me see if this is real or not. See if I got this wrong. My phone hasn't been working all day long, so I gotta try to call him right now, see if it works. He probably doesn't want to talk. I'd assume that bears don't want to talk about this. Let's see if he answers. I don't even know if I can call. I gotta check really quick because my phone hasn't been working all day. I thought it might be internet, but let me just do a check here. Nope, my phone's not working. So wait a minute. Let me DM him. Let's see what he says. Rip the fucking doors off. Still valid. Let me go potty really quick. And I'll give you an expectation here in just a minute for tomorrow. But dude, like, we should super ramp this shit. Like, I want you to know right now, like, ramp. Like, literally fucking ramp. Ramp this whole fucking thing. Like, just rampo-rama. It's what it looks like right now. Like, unless we break this shit down here, and not even that. I keep saying that, but it's not that. It's this. I've been trapping in sellers all day here, so. Up only. Move this one over right here. I want to sell the fuck out of this so bad. Like, I can't tell you. I'm not even a bear, and I'm like, I just want to sell the fuck out of this. Just tee off on it. Like 5 minutes to go potty really quick. Here's the next leg right here. This one right here. That's what those guys are. Up only pump show. Yeah, my phone isn't taking anything. My phone's not taking text messages. Ain't taking nothing. Did you ping me? Thank you. One quick second here, guys. Up. We're going up. Up, up, big, big up, big up. I'll try to restart it right now and see if it works. You can force restart the network, maybe? There's another one right there. Telling you're going up. Just trust me. It's going to be fucking stupid. Take every fucking stop. You see it right here. You see it right here. You see it? Here. See it now? It's right here, just so you can see it. And look at this one right here. Like there's another big fucking move here. I think we got that tick, didn't we? Or there's the tick right there. Yeah, we caught that by a penny. Watch out for an explosive move higher. Watch out for a squeeze, giant fucking squeeze going higher right now. Big squeezing. Big squeezing. To trade 669.710 with a pullback. I'm just going to remove this here so you can see it as it happens. It should be like a squeeze like this, and then up. I'm not lying. The fuck on out of the way. There's another little 6697 SPX has R2 slightly higher. If this is a third leg here, it's going to move. Go vertical into tomorrow. There. There's a whole nother leg in there too. Like we're in the midst of the beginning of a third leg right now. Not the end, but the beginning of a third leg. Of a five wave move, yeah. We're at the start of 3 right now, theoretically. The start. Should I say that if you're short, be careful, maybe? I don't know if I should say that publicly or not. I'm not going to say that publicly. There is an intraday R2 up here, 6697. And we could get rolled down there, but we're already coming into target 2. Right there. I should play some fucking music here for the Bulls. Hold on. I'm like in the middle of trying to get a paper trader on the show, and should be playing fucking dance music for Bulls because they're about to get it. Clear all forms. Dude, I thought I was in max already. What plan do I have? Okay, cool. Yeah, I'm on. I got the. I got pinged last week for playing. I got pinged last week for playing. A free song from YouTube. Johnny Comes Marching Home. I got pinged for that. I was like, "What are you doing?" I guess it's not free anymore. I got to take that off the show runner. Let's see what we got here. I want to sell this so fucking bad right now. I never want to sell the market, and I'm like, right fucking now, I want to. I gotta like pin myself in, like at the bear coming out of me. Like this, look at how beautiful that looks right there. Oh, God, I just wanna sell it. Can you hear that? Slide that over. Is that 1, 2, 3, 4? Where do I go in, baby?
Every time I get ahead, I end up going 2 steps back. So tonight, I'm just gonna let this one ride. You know what I mean?
Ta-da. A fair chance of us gapping too in the overnight. Mm-hmm. We got to hit 668. We can't even begin to think about shorting this until 668. And even then, it says that we're going higher, so it doesn't matter if it takes like a day or 2 weeks. October OPEX is looking like it's bullish. Unless we can't get price there now. If we can't get 78 now, 78 by October OPEX. If we flush 68, 70. Squeezing higher now, trading 667.05. Coming into a little bit of resistance on SPX. Just watch this closely, right? We're going to just zoom in on this. Keep an eye on this 6697. Oh. 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 Oof. Oh. Oh. Slap. Fuck you. Take some off. Take some off right here. Take some off right here. Oh God. Now we're gonna do this whole thing right here. We go up here and down here. Oh God, it's such a fucking mess. Oh God. There's another pump right here. You're gonna see like hold this right here and then up. Oh man. Oh, oh no, no. Yes. Dude, what is this? What is this music? Hold on a second here. It's the wrong music. Turns back down. I just warned a bunch of people on email. I was like, yeah, get out of the way if you're trying to sell this. Dude, what is this music? This is garbage music. Woo! Hot sausage. Woo-hoo! Hot sausage. Oh man. A lion. R3 is 669.57. Ready? Oh, right there. Oh. Ooh. Jesus Christ. All right. This is 30 right here. We'll try it again. Move that one over there. It's an appropriate song. We could attempt to sell this, but I don't see it yet. We're going up. We're going vertical. I'm telling you, we're going vertical. We're going to trade 678 or 668 to the bell, in my view. There it goes again. Whoa. Is Chase alive? Is he okay? I haven't seen Chase. Is he around? Oh, wait a minute. Wait a minute. We can hold all this here too, though. Hold on here. Let's watch this together. This is the big A.
I've got a very important phone call to make.
Here comes the 5-minute trigger here. Same spot as before. Need to break that last one right there. I'm trying to sell 6,700 right now on SPX. I don't see the sell yet, though, so. That was a nice candle. And that was a nice red candle, but they've done this all day, so don't believe that red candle just yet. Not yet. There's one right here. Show this to you right here so you can see it. They're still alive. The fucking buyers are still here. Don't trust these fucking buyers at all. They're still here. They can try. They're going to try to sell it, but there's like a mission here to get above 6,700. Like hurry, hurry, faster. I'm assuming it's to tag 678. Where's 678? Let's look at this one right here. Right there's the expectation. Watch out for going vertical into this close. I am not fucking around. I'm being 1,000% fucking serious. And until you lose these buyers, the way is higher. We'll watch this down below. You have to lose like all of this. Like you literally need to see this come all the way down here, break there, and then make a new low. Otherwise, don't bother selling it. There's no point. Been a whole big giant sucking sound. What else is crazy too is by morning. Look at what happens by morning. Half hour comes up. I mean, they're there. Like, buyers are not only there, they're closing the door here. Watch this one close. Oh, let me watch this one closely. Watch that right there. They're defending this big. See this dot, this triangle right here. They're defending this whole thing like it's nobody's business. You see that right there? That's so far as consolidation for this big fucking move right here. It's almost pump time again. Watch out. I don't like when I don't like when they have singers. It's like that generic singer sound. $6.66 or 7 cents right now. That's right down here. Here, let's do this together here. I'm gonna give you guys. It's 3:24. I'm gonna give you some expectations into tomorrow. Okay, so just have a look here. This half hour and hourly trigger are racing higher right now. They're closing a door, or theoretically closing a door. Let's go to a 4 hour. Look at that fucking thing. Whew. That's like a 3-bar trade too, right? 1, 2, 3, 3 white soldiers. The pullback is going to be epic. But if you have 3 soldiers on a 4 hour, right, you get 1, 2, and then your next one is big up here. Like up here, big. Now I can't tell if it stops at 68 or if it gets above 670 just yet, but let's take a peek. So you have some expectations into the close. That 4 hour still stands right here. But it's going to be closed right at the end of the day today. It'll be right here somewhere. Slightly higher, like right about there. There's another one down there. Here's the start of the next hour in here. Vertical. We're going vertical. One day. $668. Here's the look, like this is all 1 hour right here. 668 is the target. 1600. Let's just trade that one right there. I'll be honest with you, like just trade that one. And we'll take this one down. Here's our 3 and our 4. This is always a sell on buy side, usually 99% of the time. But watch this hourly trigger coming up, and I just want to see this really quick. So you've got 1, 2, 3, 4, and we don't know about 5 yet. Don't know about 5 just yet. And I would like to see that go higher right there. So just so you can see that right there. Get rid of this. That'll be there, so you can get rid of this. You don't need that. You don't need this. You're just going to need this right here. This is only to add. And the only thing I would say to you here would be the way is higher. And I mean, I'm being serious here. Like even if we lose this tomorrow on Tuesday, you still have, this is the part I'm trying to explain to you, is you still have this like half hour coming up. This hourly is coming up. So even if we pull back here tomorrow, they're going to try to buy it again. I can't tell you that this is coming down either, because if this is the first leg right here, so you get 1 right here, 2, right, 3, 4, and 5. Just so you can see it. Right? There's 1, beats that one. Your second leg is always like double. It's like right in here. you're gonna expect to leave runners on for that shit up there. That's 672, and then you can do. This is where it gets crazier. We could just go sideways here. Like there's no requirement that we leg it down here. There's no requirement. We can, but there's no requirement that we do. So let's go with a tick. Just trying to be this. I'm using this for demonstration purposes only. It literally needs to go right about there. Here's 1600. Here's 1600 right here. I would close them by the end of the day today. If you're long right now, close by the end of the day and look to pick this back up tomorrow. And we're still building, like all this is being built up right now. And you'll put a 4-hour bar in here. Slightly higher. It should be somewhere in here tomorrow. So this could be even higher, like right here. The candle's not in yet, but and there's your half-hour trigger. By the time we get there tomorrow, it'll be up here. Your hourly will be up here. It'll be higher. This can come all the way down. But even so, they're going to be there to buy the fucking dip is the point, right? I mean, let's look at it. Like these guys right here, whatever we do here into this close, they're going to be waiting for you here tomorrow morning. Right? They'll be here tomorrow, right? There's your upside down W. So these are expectations unless hold on. I'll give the Bears a chance here. I don't see how that's lost. Like I would prefer to even see this. $662.58. And we can put this in even sooner. Like we could easily come up here at nighttime, right? Slam this one. Come back down for your fifth wave right here. And look, we're right fucking there too. Stay on your half-hour trigger, but like you can defend all this. That goes up. You can actually defend all this. That goes up still. You could even defend all this right here and it all goes up. It's all up. It's just up. If it was me, if you were asking me what I think you should do, I'd take some off here into the close and look for the dip by tomorrow. If they squeeze it up in the overnight, that's a hard trade. And even if you did squeeze this up, you'd probably have the sell right on the bell. So make sure it's structured for a spread call. If you're going to hold overnight, call spread. There may not be a buyer here for you if they ram this up in the middle of the night. I like the idea of the pullback to the half an hour and hourly trigger. I always like that. So I'm going to be looking for that, looking for this half hour to come up here, looking for this hourly to come up here, float around over here. Like to buy, 1, 2, something like that to get up into the next trade. Up only, though. Now, there is something else to be said here for the bears if they want an answer here. If you are looking to be sell side, like legitimately sell side, or if you're looking for this trade right here, that's possible. But in reality, I'd want to see I want to see the loss of the trend here. I really want to see that loss of trend. Is the targets that I have are fucking stupid. I mean, they're literally stupid, like 678 sooner than you think. And even if they don't, we're going to a place where October OpEx has 678 all over it. And then we're not even considering rolling higher from there either. I know this sounds crazy, but we could be talking about October OpEx being, 700. And we're not there yet, so I can't tell you that's going to happen, but we definitely have this on tap right now, or at least the attempt of this. The only thing I would leave you with this on this is, the only thing I would leave you on this with would be that your fifth wave is usually the weakest. It's oftentimes used for supply, and you'll get a large correction in there at some point, but it could be sideways or it could be sharp. They call them sharp or flat corrections. Just note that, whatever that correction is, there's no it's not definitively sharp. So normally you get like a flat sharp, but this one's looking pretty flat over here. A little bit of a dip. There's a major sharp or a flat correction here. I guess you could call that sharp. It's flat. There goes the move. Even then, just look at this here. So you go up here, right? You smash this fifth one. When they come back in, it's like 1, 2, and 3. And you're still on trend. You know what I mean? So, yeah, this here closes so many fucking doors. It's something like this. If you want to read into that, you want further out expectations, you can see it right here, here, and then there's just no guarantee we're gonna break through this stuff here. You can't even get into this here until, dude, it's all the way down here. There ain't nothing down there. So this isn't even in play yet. This hasn't been lost either. None of this has been lost to start that corrective process. So As far as I can see, the bulls still have this until they start losing this whole thing right here. And they can still dip down and go up. They can do this bullshit down here and go up, and then boom, there's your continuation. We don't even believe this yet, because you can see it right here, right? It's coming up to shut the fucking door on you right now. You can see it. It was a good day. Yeah, 100%. This is the target right here. 668. We traded 667.23. That's pretty good. Come back for a dip buy tomorrow. Trying to see if there's anything that I'm missing, but I can't see it. 30-minute chart. Let's look at that. And you got to be, because this is why I'm afraid of the close here too. I'm afraid of the close because of this right here. You know, all these prior ones right here, like we could easily squeeze this up into the overnight. And the daily close, this is bullish as fuck. Look at this right here. Like, just this right here is just, you know, plenty of fucking room. So don't discount these buyers. Don't discount them. Like, these guys can run this fucker right up if they want to. One hour. Do not discount these bulls. Unless we get underneath 652, 58 is lost. Buyer's going to come back in and try it again. There's plenty of velocity to do it. So be wary of these bulls. And be wary of the, more importantly, be wary of like trading out that 678 into OPEX. It's not guaranteed, but they're hammering on that 670. It could be something that we trade in October, but like we could do that 100 points during, like, not the first week of October, like second, third week of October. We could trade it. We could do it now, or we could do it then. The bigger issue here is that you need to start breaking some, like, if you're a seller, this is why I fucking hate being on sell side right now, unless you're like under the hourly trigger, with like new lows. And even then, they'll buy the daily trigger, they'll buy the hourly trigger until it fails. They will. They keep adding and adding and adding and adding. I looked yesterday at a chart of the daily trigger. Let me show you guys something here. Let me just show you guys something really quick. Hide drawings. You know, let me show you how rare this is. So, not this. Not the hourly trigger. What's rare is the no trade to the weekly trigger. Normally we see it at least a little bit, like here, here, here. See it here. But when we start doing this shit right here, I want you to look at this. This is December of 2023. We had no pullbacks to the weekly, and it was a fucking monster run. I mean, it was fucking monster. This is November of 2023. We went up 23.89% without any fucking pullbacks. So if anyone tells you we can do that, we can. And the killer here is the daily trigger. We haven't seen any weekly pullbacks in a while. So that was 23%, right? We're roughly right there right now. But we got more to go. Like this is 23%. That's 694. And that was just in 2023. So like like you want to see fucking up? We have an example 1 year ago. 2 years ago, I should say. So like this is easy. Anyone tells you that we can't do it, I got one for you from just a few months ago, or from a year ago, for a full move. So the only thing I would say is look at this reach here. This was 635, trading 670 right now. Last time we saw the daily trigger, it's almost a 5 or 6% move. This is about where about a 6 to 7% move is the last time when we did this one right here. They were saying like, oh, you'll get like 6-7%. I'm like, no, maybe it was this one right here. They said expect 5 to 7%. Yeah, it's 8%. Like 6 months later, kind of shit. I think 12 was possible when it was this one down here, and it was still daily trigger. They were like, oh, we had a correction. And I'm like, they called this a correction back here, and I was like, that's not a fucking correction. Like that was a correction. I'm like, no, it's not. Like anything the daily trigger is not. Just because you're stretching away from it doesn't make it a fucking correction, in my view. Correction, in my view, is always to this weekly right here. Every time. Pullbacks are to the hourly and the daily. Corrections are to the weekly. I don't give a fuck what Investopedia tells you. I mean, just look at that right there. Bam, bam, bam. 670. And you could start a whole new sequence in here. You could literally start a whole new sequence. 1, 2, 3, right? And then all of a sudden it's bam, bam, right? There's one. Ding, right? Then that's just one. 1, 2, 3. To 74, 75, 78. So, go back in here to the close. $12 minutes to the bell. They could still ramp this fucker right now. But they still haven't lost the 1 or 5 minute trigger here. Do you see that? Like, this is the same bullshit. They still haven't lost it. You still can't sell this. Like, you literally, please believe me, you cannot, like, right now, you cannot sell this. You got to literally lose the 1 and 5 minute trigger. This is driving the whole market right now, 1 and 5 minute trigger. Do not try shorting this stuff. Don't do it. Just buy pullbacks. Pullbacks on the 1 and 5, pullbacks on the hourly trigger. Watch out for a super ramp into the close. This is R2. New high on the day on that trade higher. New high. How about the fucking Monday effect for tomorrow? Gap that fucker. Instead of the weekend effect, we're going to do the Monday effect. Do not be short here. Not yet. I mean, they're trying. There's a little bit of stalling here going on. I can see the stalling right here, but SPX is stalling, but not. There's no all-time high on SPX, but SPY hasn't put one in yet. Okay. SPY hasn't done the 668, 6700 thing yet, so watch out. What does Jedi call it? Rampo-Rama? Watch out for Rampo-Rama into the fucking close today. God, I want to tee off on this so fucking bad. There should be some chances on some opens, some opening days. There should be some chances. We got to try to start selling opens soon. Not yet, but soon. I'm going to warn you, before I leave you today, I'm going to tell you guys something, okay? If you're a bear, there's a fair chance that you get gapped overnight, okay? Tonight, fair chance. There's also a chance of a dip buy in the morning. Take it slow if you're a bear. And if we flat correct, you're going to have to be in for a bad time, too. If they grind us like sideways here for the next, fucking 15 days, they could send this shit, still send it up higher. You gotta lose. I'm telling you, you gotta lose like the hour, the daily. You gotta lose the hourly trigger. Like, just say that you gotta lose the hourly trigger. They're coming up from the depths of hell. They're coming up from the depths of hell right now. They got more oomph in them. We could gap up, trade sideways for like fucking 15 sessions. And then slam into 78. So I'm begging you if you're a bear. I'm begging you if you're a bear to watch out before they trade, before you either lose the hourly trigger in a meaningful way, or we hit 678. I don't know if that's now or into October, but just be afraid of it. It's there. We could grind sideways for like 2 straight weeks. We could grind sideways like now into middle of October, or like, I don't know, it's the 5th or something, 7th, and then start ramping again to the upside. So just be careful if you're a bear, okay? Please, I'm begging you. What else? 680, yeah, 678, 682, then a back test on 50, then trade 700. I got 700. I don't know if there's a, I just don't know if there's a, if the dealers are gonna fuck us up there at 78 or not. And even if they do, we're closing doors everywhere. Like 650s becoming like bottom right now until 700. At 700, you could see 575 maybe. Maybe. It's gonna be an epic though. When it fucking crashes, it's gonna be epic, and it's gonna grind. Or we'll have some sideways, but it's gonna, like, you got maybe like 2 weeks of grinding, but it's gonna go grind, boom, grind, boom, grind, boom. It'll be violence to the upside. Violence. I'll try to put out for you tonight in the Discord a if it trades like that, I'm gonna put out a much farther out expectation, but They're shutting fucking doors on you, man, and me. I can see it. They're shutting the doors. Like, they've been shutting them for weeks, and I'm like, there's 30 buy. There's 50. They're doing 50 now. Let's go trade fucking the big boys. Let's trade 700. Let's go trade 698. Let's go through trade another 300 points. God. Also on the paper trader. So we did look at paper traders in depth. I think we're right back to building our own again. Now, we do have devs that are offering to build it for us. From my understanding, it's not going to be that difficult to do. So we are, and I think we've already built one, a basic one. So we're going to try to get one of those done for us over the next few days, weeks, and have one up on the site for you and on the show. And I will do paper trading together. What else do I have for you guys today? I think that's it. I think that's all I've got as of today. You have the expectations for tomorrow. You can see the last wave higher. Look for a pullback, or either a squeeze up overnight or a pullback into tomorrow to do this one more time. Watch out for the gap up to the upside overnight. If we get the gap up, we should trade sideways and roll slightly. And I think it's going to be a flat correction, but I can't tell. Which is kind of good for, or it's kind of good for Theta Gang. If we can do the flat correction, be cool. But we could start ramping once again, dude. Like, we are so setting up right now, like an October, green October. It's not even funny. Like, it's walking, talking, acting like a green October. It's screaming green October right now. Mm-hmm. Like, not just what your thoughts and feelings are, but like the technicals are doing it right now. I gotta post that on Twitter. Wearing tight hair. Technical screen, we're starting to screen big flat correction in October, another massive move higher. Losing the 5-minute right now. Yeah, still higher tomorrow. This is where we'll be in the morning, right here. At 9:30. All right, I'll see you guys tomorrow at 9:30. There's a lot of shit going on here that's showing, like, I posted this on Discord or on Twitter. I know the rolls are already happening to like the higher rolls already happened. I knew that last week, but the technicals are screaming that we can have a big month in October, whereas we're all thinking we could roll in October. It ain't showing it to me. We'd have to move really fucking fast to the downside with not a lot of time to do it. Today is the 22nd. You know, you got 2 weeks to lose trend, which is look how low it is. Trend is 647. You need to be under 647 to lose October, and I think that's a 3.5% correction. So you would satisfy, theoretically, you would satisfy, you know, what the street wants, which is insano. Insano. All right, I'll see you guys tomorrow at 9:30.